There we go. So, what is up for y'all on the YouTube replay? Hope you're having a great Monday. Today's a holiday, so hope you did something fun. And we're going to be looking at some stocks to maybe pick up next week, or really this week because it's Monday. So let's check it out. I'll give you a quick portfolio update. Then I had a stock someone left for me on the last stream to look at. So if you watch this on the replay and want me to look at a stock at the very beginning of the next stream, I'll do a bit more of an in-depth analysis on it. We'll look at Spotify here in a second. So here's a quick portfolio update. Here's my buy and hold account. And someone said, are you still holding Perry? I am. Checked it out. It's at the very bottom here, my smallest holding. So yeah, I am still holding Perry on network despite being down 50% on that company. But yeah, this is our buy and hold portfolio. We're up 7.5 grand all time. Pretty good. Then we have our dividend growth portfolio. So every stock in here actually pays a dividend, and every stock in here is also in the S&P 500. Probably heard of some of these before, like Google, Meta, McDonald's. I also have a small little Roth IRA, $1,900, not too shabby. And these are other stocks that I own in here. And CRMD is the stock I'm looking to buy a lot more of this week. CRMD looks like a steal of a deal. I'm actually about to make a YouTube video on CRMD soon just because they're so great. But yeah, let me give you let me go over my growthy portfolio real quick. So this is my Webull account. We're up 16% all time in here. We have underperformed the market, and we have a lot of popular names in here like Reddit, Disney, SoFi, Robinhood, AMD, Super Microcomputer, T-Mobile, Sprouts Farmers Market, Progressive. So I probably have too many names in here, to be honest with you. But let me analyze a stock someone left for me on the last stream. And this is Spotify right here. Yeah, I'm streaming on YouTube and TikTok, by the way. So this is a huge company, a $140 billion company. And they're trading at a pretty expensive valuation, too expensive for me to pay. But let me show you why they probably deserve this high premium. So they're trading at 150 times net income. That's basically because they just now got net income positive. But here's a cool stat we get about Spotify. We can see their monthly active users. They have 696 million monthly active users, up from 626 million the same time last year. And 90% of that comes from their premium revenue, which is up by 23% year over year. So they've been growing very nicely. The analysts expect a trend. So this had a little one-time adjustment this quarter. They didn't really lose net income, but that's why the PE or the net income multiple looks so high, because they had this technically one-time adjustment. Because if you go to the operating profit, it was actually up by 67% year over year. So they really made around 400 million of net income, but no big deal. And they've been growing their balance sheet like crazy. And really this ratio, the asset to liability ratio is 58%. Now it's 50. So instead of paying for Spotify every month, or on top of paying for Spotify subscription every month, maybe you should buy, a fractional share, $10 a month into Spotify. They're a very cool subscription model company. They kind of remind me of Duolingo. Duolingo is another really nice stock. What do we think of SPY? We'll go tomorrow. So, the market opens in 8 minutes. So for y'all watching this on the YouTube replay, just wait 8 minutes and then the market opens and we can see how stocks are moving. We'll see. In 8 minutes, we'll see how the market opens. So we'll come back. Hey, bro, there's a fake account trying to follow people. Yeah, hey, watch out for people impersonating me. This is my only account. I'll never follow you, DM you. I sell nothing. Hey, what up, Plasma? Bro, I just realized my job uses Toast registers. Hey, Plasma. That's so cool, dude. Yeah, they're a point of sales or like payment system processor. This is Toast right here. You know what? Let's analyze them. And yeah, if you guys got any stocks you want to look at, let me know. What up, 523? We are back. Yes, sir. Zim stock. Yeah, we can look at Zim too. That's that dividend shipping company. But here's Toast right here. Here's why I own them. They are exposed to restaurants and small, medium-sized businesses, but the growth of the sales is really the best part. They had a record quarter, record sales. Look at this revenue. I mean, it literally just hits a new record every year, every quarter. And if you're looking for a buy and hold forever stock, this is what you really want to see in terms of a trend. I mean, full year 2020, it was 800 mil. Full year 2021, 1.7, 2.7, 3.8, 4.9. So they're growing very nicely, and also not just sales, but they're finally net income positive. They're the most profitable they've ever been. 90 mil this quarter, 60 mil last quarter. They also have this fortress of a balance sheet, no net debt, deleveraged by 6% year over year. The free cash flow also just rocketed to a new record. So for all those reasons, that's why I own Toast. What's the forward PE on this company? The forward PE is a bit expensive, 93 times net income, but you really look at 2-year out net income multiples because they just got net income positive. I don't know if I'd buy them right here though, but I do own them. Might be biased. I got 15 shares of Toast. And here's another kind of related stock. There's Toast and then there's egg stock, ticker symbol CALM. This company has the largest market share for chicken eggs, literally 25% market share in the US for chicken eggs. And if you look at the very middle of my screen, of course, they just sell a commodity. So they trade at very low multiples. They trade at 4.6 times net income, but you get a 7.23% dividend yield with this stock. Plus, it's very nice stock price appreciation. So if you're looking for exposure to eggs, which, eggs are really popular, healthy people, it's kind of like buying an oil stock, but I love this company. They made $7 of EPS this quarter, and they returned $2.34 of that as a dividend. So Calm's pretty cool. All right, so GGPI said Zim stock. Let's do it. Oh, yeah, we can look at HIMS. Should I keep buying ETH? I don't know. I don't really cover crypto. Ethereum's been doing pretty good, with Bitmine Intervisions or Bitmine and all these other companies buying up a bunch of Ethereum. But check out Zim right here. This company actually has a rule where 50% of all the net income they make, it returns to the shareholder via a dividend. So if we go to their net income right here, they only made 23 mil of net income this quarter. So basically they won't have a dividend this quarter. This company benefits from all the supply chain logistics issues. In 2023, when everything fixed, they were losing a boatload of money. But now that they're making net income, they pay out a dividend, 50% of the net income they make. And check out 2022, that's when the supply chain issues were huge. The certain canals were the Red Sea and everything was blocked. And, they paid out $27 of dividends that year. The whole stock price is $13. So that's 2x the entire share price. I almost wish they would have kept some of that, either do share buybacks, reinvest in the business, buy a business. But that's a very shareholder friendly company if you like dividends. But I don't know if that one will outperform in the long run. Okay. Oh, Marvell. You know what's very cool about Marvell? This is like the cheapest chip play out there. So if you're looking for a cheap semiconductor stock, Marvell's pretty interesting, and they fell 19% on Friday. So it's actually at a decent price. It's not like you're buying a stock at all-time highs. And if you kind of look on the left there, that 22 PE, yeah, they're trading at 22 times forward net income. So they're trading at a very low valuation compared to all of their peers. And they fell 19% on Friday. They really shouldn't have. They missed by 1% on every metric. They missed on revenue by 1%, net income by 1%, and EBITDA by 1%. But check out next quarter. This is what will be heavily watched, in my opinion. Them hitting this $1.50 EPS number, that'll be a record net income quarter. It should be over $1 billion in net income. So people are really focusing on next quarter to see what happens. Maybe they gave bad guidance. I'm not sure. Still got to do more deep dives. But yeah, Marvell, I actually do like this one. I'm considering putting them in my Roth IRA as a little position. Hey, what up, CIC? He said, thoughts on XRP? Yeah, we don't really cover crypto on here, but, crypto is a unique asset. They don't have any earnings reports, so XRP can't miss on their net income number, which is kind of cool. And by the way, the market opens in 3 minutes. So in 3 minutes, we'll see how the market opens. So that'll give us an idea of how the market will open tomorrow. Hey, what up, Plasma? I'm going to go take a shower. Hey, see you later, Plasma. Be back in 15. What do you think about Opendoor? Hey, Sean, what up, Remy? So Opendoor Technology, this is kind of a momentum stock right now. I wouldn't buy this one if you're planning to just buy and hold it forever. I'd buy this one if you were trying to swing trade something. What this company does is they just flip houses. And to be honest with you, they're not great at flipping houses, but this company is really begging for a lower interest rate environment, because when we go back to zero rates, let me show you what that did last time to their sales. So if we go down here to their actual revenues, they are still losing money every quarter, but check out 2022 in the zero interest rate environment. They were making $4-5 billion of revenue a quarter. Well, now, as rates got higher, their sales collapsed. It went under $1 billion, fell 69% year over year. But now the sales are at $1.5 billion. So it's basically just a bet on what will happen in a lower interest rate environment. They also just cut and fired a bunch of staff to really fix their net income losses, and it's working. So I'd be very, very careful with that one. I'd swing trade it. I don't think I'd buy it and hold it forever. So 2 minutes till the market opens. Can't wait. Hey, what up, Ed Music? Good to see you. Hey, what up, Fork? And yes, he said, let's do CDNA. Then we can do NUTX and HIMS. Those are cool. So here's CDNA. I haven't heard of this company before. They're a really small market cap. So if you look in the top right, they're only worth $700 million. So and they're the same prices they were back in 2018. Let's go see if we can figure out what happened on their earnings reports. So, yeah, they missed analyst expectations by a good chunk. So they missed on revenue, missed on net income, and they missed on EBITDA by like 10%. So that explains why the stock gapped down. They just didn't meet the analyst expectations, or they missed the expectations. But it's not. Let me see here. Yeah, they are still. If you look at this one quarter, it says they made 80 million in net income. They didn't actually. They actually lost 20 million that quarter. Did they sell an asset? No, I don't know. Anyway, I would just be careful with this one. They're not growing. Sales are down by 6% year over year. They're losing net income every quarter. They're only worth 700 million. So I would just be careful with that stock right there. Very small market cap. So, hey, what up, Forky said NUTX. Let's do it. I don't think I've heard of this one either. And I cannot type right now. Okay. Oh, Nutex Health. Okay, this one is on my watch list. So this stock is at an all-time low. Do beware. Another very small market cap company. They're only worth $460 million. But remember, the last company we just looked at was worth $700 million. Here's why, to be honest with you, I'd rather buy this company than that company that was worth more. This company is actually making net income. So the previous company was losing money every quarter. Well, this one's actually consistently now making profits. The sales have grown very nicely, up 220%. That's a 3x increase. And on that, they made 125 million net income. Just very strong, profitable numbers here. They're growing. That is real net income they're making. That's so impressive. So they're deleveraging their balance sheet as well. The liability ratio is only 63% versus 80. So actually, this one's a pretty cool hospital division. So it looks like a healthcare play. And look at how that hospital revenue just rocketed up. I think they did some sort of acquisition. This looks too growthy to be organic. But if that's organic, then geez Louise, they're huge. Okay. The market open. The market just opened. We'll give it a minute for volume. What market? Now the market opens at 8 p.m. The overnight market, so we can see how stocks are doing. So Koss said SoundHound AI. So if you're a shareholder of SoundHound AI, there's really one metric you want to watch here, and that is their subscription business. I do like subscription model companies because it's all recurring revenue. And check out the growth of their subscription business. This is the unbelievable part. If we zoom out to last year, down here, these numbers were literally nothing. Nothing burger, 400,000 a quarter. Well, now in the most recent quarter, it's 32 mil. That's an 8x increase from the previous year. These are some crazy growth rates, and they're also beating on analyst expectations. Analysts expected 32 mil. They reported 42 mil. That's why they had this initial huge gap up on earnings, continued to rally the next day. But why did the stock fall right here? It's actually because they issued some shares to kind of fortify their balance sheet. They do constantly dilute you, but I don't blame them. It's really beefing up their balance sheet. So they diluted you by 60 mil last quarter, 95 mil. It's not the end of the world, because that's normal for these stage companies. But yeah, you're really just watching that subscription revenue for them. Yeah, I'll show you the market opening. So yeah, if we head over here to Robinhood, we are up right now 0.04%. What is the market doing? The SPY, yeah, so basically things are flat right now. The better way to check this, and I'll show you my my growthy portfolio over here. This one also shows the overnight market. So let's see, is anything up right now or down? What's down? Okay, so yeah, there's not too much volume right now. So we'll come back in a couple minutes and see how the market's moving. Okay, let's see here. How do you feel about Duolingo? Yo, I love Duolingo. This is another subscription model company. If you're looking for a stock with good fundamentals, good financials, not financial advice, I think this is a great one to own. The reason they're falling is because of just increased competition from like ChatGPT, but their numbers are still super strong. Like, check this out. 85% of the revenue comes from their subscription model business, and it's up 50% year over year. This is that language learning app, Duolingo. If you have the app, you either pay the subscription or you see a bunch of ads. And this subscription revenue is up 46% year over year after being up 51%, after being up 45%. So they're just continuing this insane growth. You can kind of just see it on the blue lines up here. And also not just the subscription revenue, but the advertising revenue. That's up 55% from the previous year. So both main segments on Duolingo are growing like crazy. and not just revenue, but also profits, net income, free cash flow. They made 45 mil of net income this quarter, and the free cash flow was up 60%, nearly 100 mil of free cash flow. So Duolingo is a great company, not financial advice. They also just deleverage your balance sheet like crazy. This is good news. Their assets went down with the liabilities. They've paid off the liabilities with their cash, which is an asset. So this is no big deal. You really focus on the ratio, and the ratio just went down by double. Insane news. So Duolingo is a great one, not financial advice. I'd probably buy it. I'd nibble on the position down here. Yo, what up, Fortune? How's it going? Yeah, I hope you are having a great Monday, by the way. Enjoying the holiday. So, Eggplant, what up? He said CRDO. So this is Credo Technologies. Very growthy company. I do like this one. CRDO. Yeah, call them. No problem, brother. Yeah, sorry, my Wi-Fi is a little slow right now. So here's Credo Technologies. This one's pretty much at an all-time high. So yeah, congrats if you own this stock. They deserve to be at an all-time high as well. They're on my watch list. They're so great, but the only bad news is they're a bit pricey. They're trading at pretty expensive, but here's why they deserve a high valuation is because they have high growth. I mean, the sales after growing 90% year over year grew another 180%. These are some incredible growth rates on Credo, and not just revenue, but profits. 36 mil this quarter, 30 mil last quarter. They're going to continue this net income positivity with this huge sales growth. At this growth rate, what are the sales going to be this time next year? They also have an absolute monster of a balance sheet. They have no debt at all, tons of cash. So for those reasons, I love Credo Technologies. They're kind of like SoFi. Well, they're not like SoFi in the industry, but they're like SoFi where they have such great financials. I wouldn't really be trimming that one at all-time highs. I'd probably just hold on to it. I don't know if I'd buy here, but I would put on the watch list to maybe buy on a dip. Oh yeah, I forgot to get to this stock. So here's HIMS, and then we'll go see how the market's doing. Hey, what up, Jello? Yo, not Fates. How's it going, brother? We're thinking about a position in Duolingo. Yeah, I think so as well, man. Duolingo, I think, is worth a small portion of the portfolio, maybe a few percent, just to see what happens. So here's HIMS. This is that healthcare company. They're super growthy. The sales are up 72% year over year, and they're finally making a bunch of money. Near 50 mil in net income a quarter. They did raise some debt to raise cash. This was no big deal. Again, the assets grow with the liabilities, so they rose $1 billion of cash. That's why the cash just rocketed up like that. So no big deal there. One thing that the stock has been struggling with is the fact that they lost their partnership with Novo Nordisk. They no longer sell Ozempic on their website. They used to sell a weight loss prescription, and it led to a lot of the growth. Now they no longer sell it, so that might be taken out of the future. That has to be priced out of the future growth. So that's why the stock has been struggling recently. But I still like that one. I'd put them on the watch list. I don't think they're a meme stock like a lot of people think. Okay, Palantir entry. Yeah, let's do Palantir. So this company is another one that I love. They're like Spotify. I love the company, but I don't love the valuation, and I'd love to own them. Like, check out this valuation right here. They're trading at 108 times revenue, not times net income, but 108 times sales. But here's why, again, they probably deserve the high premium because they're high growth. If we look at where their revenue comes from, 55% of Palantir's revenue comes from the government. And these are actually, most of these are like police stations using their software. Oops, hold on here. Sorry, there it goes. All right, the revenue is at a new record over here. I mean, these sales, these year-over-year growth rates are just incredible. The growth rate is growing even. It's up 49% year-over-year. We haven't seen a 49% year-over-year growth rate in a long time. So the business on the government's growing like crazy, as well as the commercial side. S&P 500 companies. That's up 46% year-over-year. They just had their first ever $1 billion revenue quarter. $1 billion of revenue, 330 mil of that was net income. They're expanding their net margin, 33% net margin, fortress balance sheet as well. No debt on Palantir, and $6 billion of cash, up from $4 billion the same time last year. So Palantir is a beast. I'd love to own them, but valuation's too high. But again, they probably deserve that high premium. Yeah, they're beating on analyst expectations like by a lot. That's crazy. What up, dang? He said IVVD. What's this company? So yeah, we don't really cover these kind of stocks. They're only worth $180 million, but they're worth $180 mil. They're at all-time lows, but let's go see if they sell anything. So they have 11 million of sales, and on that, they lost 15 mil in net income. So they're losing a bit of money. Here's the thing. When you're only worth $160 million or 180, losing 15 million is pretty devastating. 16 mil the last quarter, 20 mil the last quarter. So we really want to see them narrow these losses. That's putting huge pressure on their balance sheet. They used to have a very nice balance sheet, but look, from these net income losses, that's got to come from somewhere. So that's why the assets just go down every quarter. And now the liabilities are 57 or 47% of the assets. So it's tough. We want to see them really narrow those losses. There might be real bankruptcy risk there, and that might be why they're at all-time lows. Just from a financial point of view, I'd be careful. What do you think of CoreWeave right now? What up, user 47? So let's go check out CoreWeave. That's actually a company owned by NVIDIA. So if we go to the NVIDIA portfolio over here, and then we'll go check how the market's doing, because the market is open right now. But yeah, if we go to the NVIDIA portfolio right here, their main holding, they're the largest shareholder, I believe, of CoreWeave. And they did just IPO. There's been a lot of successful IPOs recently. Let's see how CoreWeave is doing. Here's the one thing I did like about CoreWeave is how growthy the sales are. The sales are up 3x year over year. This is a record $1.21 billion. That's their first ever quarter over $1 billion in revenue. And the analysts are expecting the growth to continue. In 2 quarters, it's expected to be $1.78 billion. That is some incredible growth on CoreWeave, but here's the bad news. They're burning through a lot of money. They're losing a couple hundred mil of net income every single quarter, and the analysts are expecting them to continue to lose a couple $100 million a quarter. So we do want to see the losses narrow there, but I love the growth of the sales. One company I like that's in the same industry as CoreWeave is IREN, Iris Energy. IREN stock looks great. But they're also kind of at all-time highs. I really like them. Hey, what up, Break? You said Qualcomm. Oh, wait, let me check the market very, very quickly. Then we'll check out Qualcomm. So let's see. The QQQ is down 0.1. Nvidia is down. Is anything up a bunch? Yeah, nothing too exciting, to be honest with you. Nothing's really moving. I'll check the Webull account real quick. Anything in here? Anything up? Nope, not really. Okay. We'll come back in 10 minutes and see if there's any volume in the market. So let's see here. Qualcomm. Let's do it. So this is one of the cheaper chip plays out there. Yeah, what's the multiple on this company? Yeah, they're trading at 15 times net income. That's a very low valuation for the industry. The industry average is a 44, and they're at a 15. And they have a huge smartphone chip market share, a 28% smartphone chip market share. I think they own Snapdragon. And check out the revenue growth. So this might be why they're trading at a low multiple. That's actually still good. It's growing double digits. Sales are up by 10% year over year, and they're making a lot of money. That's insane. Near $3 billion of net income every single quarter. And they trade at 15 times net income. You get a 2% plus dividend yield, a very safe payout ratio. They have a lot of room to raise their dividend. Are they doing share buybacks? Let's see. They bought back legit 5%, 4% of all the shares that exist. That's insane. So you get a near 3% dividend yield, 4% share buyback yield. Qualcomm looks very nice. It's just a never sell stock. I went all in on this stock. On CoreWeave. Hey, good luck with that one, man. I always recommend, not financial advice, to have a diversified portfolio. I wouldn't just go all in on one company. But what up, Filthy said Eli Lilly stock. This is probably my favorite. Safest healthcare stock out there. Actually, AbbVie is really good as well. A bit of a higher dividend yield on them, ABBV, but they just had some stellar earnings. They beat on revenue, they beat on net income, and they beat on EBIT by a huge chunk. And here's what they actually sell if you didn't know. Here's what I love about Eli Lilly. They have the ability to just create these prescriptions out of nowhere. They get a ton of sales. Like they created Mounjaro in 2022, and it had 16 million of revenue. It was nothing. Now it's their main segment of business. It's $4 billion of revenue just in this quarter, up 111% after tripling, after 7,000 Xing. So the revenue growth on just this prescription has been huge. And then they have Zepbound. This is their weight loss prescription that's battling Ozempic right now. Literally, again, they created it in 2023, had 175 mil of sales. Now it's 2.3 billion. So Eli Lilly is just a great never sell kind of healthcare company, and they print money as well. Pretty much 5 billion plus a net income every quarter, and these year-over-year growth rates are just insane. So, and you get a close to 1% dividend yield on Eli Lilly. So I really like that name. Same with AbbVie. They have like a 3% yield. Eli Lilly might grow more. What do you think? What up, Nick? He said, what do you think of KTOS? Is that Kratos Defense? So let's check it out. This might be a drone play. What's the market cap? They're huge. They're worth $11 billion. They've really had a monster rally recently. So, Kratos Government Solutions, and wow, that's really growing. It's up 29% year over year on the government solutions revenue. The unmanned systems, this might be what their drone revenue is, unmanned systems. That's down by 15% year over year, but that's after growing 65% year over year. I'm not too upset about that. Huge beat on revenue this quarter. This might be why analysts are so happy, and that's why they gapped up so much on earnings. The analysts were expecting 305 mil. They reported 350 mil. I mean, that's a huge revenue beat. So I can see why that one's doing so good. I do think they are still expensive right here. But yeah. Okay. Ooh, what up? Some Fork said Amazon stock. Yo, that's another company I own here in this portfolio. I got 13 shares of Amazon stock, and then those are all my buy orders right there. As you can see, I've been DCA dollar cost averaging into Amazon. I think this is, of course, a great just never sell company. They're so innovative, so growthy, and I'll show you that. I'll show you how much they're spending on investing in the future. All you do is go to the cash from investing activities. And if once this loads, because apparently my Wi-Fi is terrible, they reinvested $40 billion back into the business. You know, they have a satellite business. Here's what is crazy: a lot of people know Amazon just for their online stores, but they are way more than that. Oh, how far do I got to go back? Oh my goodness. So yeah, check this out. 40% of Amazon's revenue comes from their online stores. So, their website, and then they have their third-party seller services where they manage all the stuff. And then this is the most valuable part of Amazon, actually. It's their AWS business, which, 2025 Q2, most recent quarter, was 31 billion of revenue. If we annualize that, for the entire year of 2024, that's over 100 billion of annual revenue for Amazon. It brings them most of their bottom line. They're the number one cloud service provider, so the AWS business is huge. Then they're in the subscription business. You got to pay for Prime, Twitch subscriptions, whatever. Then they have the advertising services. They own Twitch, Prime TV. I guess they're collecting some ad revenue. But the best part about Amazon has really been the margin expansion story, because the law of large numbers, it's hard to grow 167 billion of revenue, but the revenue grew by 13, so sales are up by 13, but profits is up by 35. So in English, that means they're growing their net margins. They now have double-digit net margins. They have pricing power. It used to be a tough business, single-digit 6-7% margins, even negative margins. So Amazon's, I think, in the best spot they've ever been in. They might be they might be the first $10 trillion company. I don't know. I really think Amazon's just such a growthy company. They don't pay a dividend. They don't do share buybacks. They reinvest all the money they get back into the business, innovating. So, all right. What up, Josh? You said, can we do Dell? Let's do it. And then Zscaler. Let's do those. We just looked at Marvell not that long ago, so we'll wait a bit for that one again. But here's Dell Technologies. They're down 9% on Friday. I wonder are they reported earnings? I know. Let me go see what they reported. So they actually beat on their revenue, they beat on their net income, and they slight missed on EBITDA. So I don't know why the stock fell 9%. Maybe it was bad guidance. That's what's hurting a lot of stocks right now, like ASML, the Trade Desk. They gave bad guidance, but the revenue's up 19% year over year. Net income's up 38. They're making easily over $1 billion in net income a quarter. You get a 1.6% dividend yield. They're like a nice value play, 17 PE. They're starting to get into server racks, competing with Super Microcomputer. They got, Nvidia shouted out Dell and Super Microcomputer to install your server racks for you. All right. What? Oh yeah, Zscaler. This is that cybersecurity company. I do really like them. And Hogan, what's up? He said TSLL. That's an ETF right there. That's that Tesla ETF. Come on, Zscaler. Can we pull it up? We might have to reset the app right here. Okay, there we go. Zscaler. So they're a big company, a $43 billion company. I believe they're in the cybersecurity industry, cloud industry, service maybe. Let's see. How's the revenue growing? If we can pull that up here without it taking forever. So the growth has been pretty good. It hits a new record every quarter. Let's see. quarterly. Yeah, check that out. Year over year, the sales are up 22% to a new record after being up 32, after being up 46. So they're just continuing. Literally every quarter, the revenue just hits a new record. So I love the growth on Zscaler. I believe they're like trying to get net income positive. So yeah, check that out. They have still lost money every quarter for the past year, but it's really all right because of how growthy the sales are. So what about free cash flow? I bet they're making some free cash flow, right? Yeah, they're making over 100 mil easy a free cash flow a quarter. So pretty nice. All right, wait, TSL, let's do it. So I believe, yeah, this is the 2x Tesla ETF. So basically you're buying this as like a pseudo call option. If Tesla goes up 1%, this goes up 2%. And if they go down 1%, you go down 2%. So it's kind of like a something you want to trade and swing trade, expecting a lot of volatility, and you get the volatility. I advise staying away from those unless you're good at timing the market. I'm not too good at timing the market. So here's a beauty stock. I do like the beauty companies like Elf Beauty, looks pretty good. But here's I would kind of stay away from Estee Lauder. But one company I do really like is Ulta Beauty because they're probably the best performing beauty stock, and they consistently make profits. It's very nice. 2 to 300 million of net income every quarter. One thing though, investors probably aren't too happy about. Let me see what they reported. So they beat on revenue, they beat on net income, and they beat on EBITDA the most recent quarter. So it was a triple beat quarter. The sales are up by 9% year over year. So that's good growth. And then the net income is only up by 3%, so the margins fell a little bit. But what is Ulta Beauty doing with a couple hundred million net income every quarter? They're actually buying back their own shares like crazy. Yeah, so the net income is up by 3%, but the net income per share is up by 9%. That means the share part of the ratio went down, and they bought back about 5%. They bought back legit 5% of all the shares that exist. So that makes up for them not paying a dividend. You basically get a tax-free dividend via share buybacks, gives you more ownership in the company. Here's a cool stock. What up, Ahmed? He said Reddit. Yo, a lot of people think Reddit is just a meme stock, but this company has such good financials, in my opinion. And I do own them, by the way, so I might be biased, but they had a huge beat the most recent quarter. They beat on revenue by a huge chunk. They beat on net income by triple, and they beat on EBIT as well. So it was just a fantastic quarter. I don't know how Reddit pulled this off, but the sales grew by 77% year over year after growing by 53. And then they were the most profitable they've ever been. 90 mil in net income. Very nice free cash flow numbers. Free cash flow is up by 4x year over year. So Reddit is so growthy. Here, I'll show you my position in them. How's the overnight market doing, by the way? Yeah, Reddit's down right now, but yeah, we have 4 shares of Reddit. It's worth 900 schmeckles. So yeah, I really think that was going to be winner in the long run. And as well, I forgot to show this. Another great thing about Reddit, this is a debt-free company. That just takes risk off the table when a company has no bills to pay, no liabilities, and $2 billion of cash. The $2 billion of cash, no debt. Their ARPU, their average revenue per user is up by 48% year over year. They're making 48% more money per user than last year. Crazy. Coherent. Oh, hey, what up, Plasma? I will get to Coherent. Give me 1 second here. I wanted to pull up Lululemon. Can you tell me your thoughts on Lulu, please? Yeah, let's do it. This is another company that's been struggling, but in response to that, they've been buying back their own shares like crazy because they still print money, and I think they're worth putting on the watch list. Their risk to reward looks pretty good under $200. Not financial advice, but let's go analyze them. They're trading at a super low PE. They just sell a commodity. So they're trading at 13 times net income. That's more expensive than like American Eagle, Abercrombie and Fitch, some of these other names. But 13 times net income. Here's one of the reasons why they gapped down on earnings. So the sales were up by 7. But the net income was down by 2% year over year. That means the margins are falling. So the margins fell by 9%, but that's still, I really think this huge sell-off was an overreaction to the earnings because they still print money. They're making easily over 300 million of Bro, come on, Lulu. There we go. So they're making 300 mil plus in net income every quarter. What is Lululemon doing with all that net income? Well, actually, if we go to the cash flow statement, we can see how much they're actually spending on share buybacks. And we can see that right here, this is the best part about Lululemon. They're legit spending near 400 mil, or basically 400 mil plus if you average it out here. They're spending over 400 million of net income every quarter solely buying back their own stock. And here's what, again, that does for you as a shareholder. So the net income is down by 2, but the net income per share is up by 2.5. So you still have positive EPS returns despite negative net income. Pretty cool. What do you use to trade? Yeah, hey, King, what's up? This is a brokerage right here. Again, it's where you buy stocks. It's my favorite one. It's in the link tree in my bio, that first link there if you want. So yeah, let's look at COHR. This is Coherent. This company, it's like a mixed bag. They have the networking revenue that's growing. This is why I think the stock fell. So you have this half of the business, the networking revenue, growing like crazy. It's at a new record. If we go to it on a quarterly basis, oh yeah, we can look at Uber's stock, MU. But yeah, the revenue on Coherent, this networking revenue is up by 40% year over year to a new record. So this business is booming. But here's the unfortunate part. These two businesses, the materials and the lasers, are both negative year over year and not really growing. So yeah, this business is down 2% year over year, and the materials revenue is down by 5%. So it's kind of a mixed bag here of the growth. And I actually think it's worth looking into, though. They're still making a lot of money, over 100 mil in net income a quarter. They had a little one-time adjustment this quarter. They didn't really lose money technically. So I do like Coherent, but we want to see the growth of the other business kind of come back. All right. Buying back your own shares is not necessarily a good thing. Yeah, it depends on if the capital could be used better elsewhere. Like maybe they could have acquired a company with that revenue, like Zim. I always thought Zim wasted a lot of their money on dividends when they could have really grown the stock with that money, with M&A or investing in the business more. So, all right, let's do it. Do you think it's going to dip more after earnings? I forgot what stock we were talking about there. What happened? Yeah, hey, Secret. Again, this is a brokerage where you buy stock. Linktree and bio, very first link there, Secret. So let's see. Uber stock. Let's do Uber, and then we can look at Zeta. Oh, I forgot about Zeta, however you pronounce it. So here's Uber stock. In my opinion, this is a stock you want to buy and never sell. It's worth holding and not selling out of. Don't trade this one. Just hold it forever. They're so growthy. Their active users or monthly active consumers are 180 million. When the same time last year was 156 million. So they've grown the monthly active users like crazy. I can't believe how they're still growing. Like the mobility revenue is up by 19% year over year. So the rideshare business is growing like crazy, but this is the crazy part. Check out the delivery business. This is Uber Eats. This is up by 25% year over year. So both businesses are growing like crazy. How about freight revenue? How's that doing? Well, that's flat, or it's actually down year over year, but that's such a small portion of their business. So look at that's done to the free cash flow. I mean, the free cash flow is up 43%. They're making $2 billion plus of free cash flow every quarter. The net income is just as good. They're making over $1 billion of net income every quarter. So Uber is just great to never sell, in my opinion, not financial advice. They also are the largest shareholder of Grab stock, GRAB. All right. Malik said APH, please. Yo, that's a stock I own, by the way. Full transparency. You know what? Let's analyze it because I do own them. I got 24 shares of ticker symbol APH, and I bought a share of them not too long ago. Yeah, on this little dip right here. I bought a share at 107. I wouldn't make this as a meaningful size position at this price. This is a stock worth owning, but not at this price as a meaningful position. This company, a lot of their growth has really been from NVIDIA because NVIDIA has this new NVLink spine product that uses 2 miles of copper cables, and they're actually ordering it from Amphenol Group. And they're just beating all analyst expectations. Like, check out the orange line, huge beat on revenue, huge beat on net income, and huge beat on EBITDA. They're just blowing away all analyst expectations. Like, check out the revenue. Revenue is up by 56% year over year. So revenue is up by 56, but the profits, the net income, are up by 108%. So what does that mean? That means they're expanding their net margins. The net margin is at 19%. It's never been 19% before. So record net margin up 33% year over year. And the free cash flow also more than doubled, over $1 billion of free cash flow for the first time ever. So Amphenol Group, I mean, it's just great. One of my better picks recently. So what up? Someone said SOXL. Is that semiconductor ETF? So daily semiconductor. Oh, this is the 3X ETF. So yeah, these get wrecked in a downtrend market. Because if it falls 10%, this falls 30%, and to recover that 30%, it's tough. But you swing trade that. You can make a lot of money if you're good at timing the market, but I'm not. Silver's popping over 40. Hey, nice. I hope silver's interesting. Gold's doing pretty good too. Let me actually double check on how the market's doing again. Yikes, looks like the SPY is down by 0.10, Nvidia's down by 0.8. Yikes, market's trending down right now. SoFi's down by 0.4. Here's gold though. Gold is up by 1%. Gold is ticker symbol IAU, and check that out. Gold is pretty much at an all-time high. It might be an all-time high. So gold's interesting. But yeah, these are all the stocks that I own, by the way. This is my dividend growth portfolio. So every stock in here pays a dividend. Oh yeah, and then I also have my Roth IRA in here. How's that doing right now? InnoData, Main Street Capital. Oh well. All right, let's get back to the analysis here. So Milan said ROOT. Let's do Root. So here's Root right here. This is, I believe, an insurance company. They gapped down on earnings right here. So there was something investors didn't like, and maybe we can sniff it out. Because we're not seeing it here because they actually had a huge beat on revenue, a huge beat on net income, and a huge beat on EBIT. So maybe it was the guidance that hurt the stock. I'm not sure, but let me see what they do. So yeah, DTC, direct-to-consumer insurance products. And wow, look at that growth. I mean, it was chilling at 70 mil a quarter, and then it's just seeing this insane growth. That might be why the stock has been so growthy these past couple year and a half. Yeah. This used to be a penny stock, $3, $6, and now it's 92. Pretty crazy. And they're making net income every quarter. That's also great news. So they're profitable. That's one thing Lemonade's struggling with. Okay. Let's see. ALAB. So here's Astera Labs right here. Yo, this company is at an all-time high. They deserve it as well because of how growthy they are. If you're ever looking at a stock and you're seeing they're at an all-time high, it's usually explained by the good growing fundamentals. And check out the growth of the business here. I mean, this is why they deserve the high premium. The sales after growing by 7x. Yeah, look. Let me zoom out and see if I can see it. So yeah, the sales literally started in 2023. It was at 10 mil. Then it grew to 76 mil. And now it's at 191 million, up 150% year over year. And they made 191 million in revenue. And out of that, 51 million of it was net income. And they made net income last quarter and the previous quarter. So they're making a bunch of net income now. And they have a monster balance sheet. No debt whatsoever. Over $1 billion of cash, up from 831 million. So for all these reasons, I think Astera Labs is just great. So yeah. REZI. Let's do this one. REZI. So this is Resideo Technologies. They're at an all-time high. Yeah, if we zoom out, that's actually an all-time high. So congrats if you own this one. They're a $5 billion company, and they had a huge gap up on earnings. Let's go look at the earnings and see what happened. So yeah, wow, massive beat. So huge beat on revenue. They missed on net income. I'm guessing this huge $5 loss, it was a one-time adjustment because yeah, they actually made 177 million of EBITDA. So there was some gap net income adjustment here. So let me see the revenue. So revenue is up by 22, but again, they lost net income. I'm assuming that was a one-time adjustment because yeah, if you go to the operating profit, it actually grew by 34%. And they really would have made around 150 million net income. So RZI, I can see why they're doing so good recently. Okay. Oh yeah, hey, yeah, I sell nothing. I have no course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me, man. Yeah. Oh yeah, and also best way to support me if you do want to is just subscribe to my YouTube channel. I'm also streaming on YouTube. The streams are up forever, so you can replay it. Sometimes I talk too fast. So yeah, if you want to support me, best way is just watch the stream from YouTube. My YouTube channel is called Nathan Robert. You can just type that into YouTube, Nathan Robert, or it's in the link tree in my bio. No way, do I see a reverse split from Lucid? So yeah, if we look at Lucid in the top left, they're only $1.98. And to be on the NASDAQ listed, there's requirements. You can't be under like $2 a share. So that's why they're doing this reverse split. The stock is at an all-time low. So pretty much, if you've ever bought Lucid, you're almost definitely down on your money. And even though the stock is at an all-time low, I would recommend not buying the dip. I wouldn't add to a position. I wouldn't start a position in this company. Like if you look in the top right, they're only worth $6 billion. So kind of remember that number. They're worth $6 billion. And here's the unfortunate part. They're burning through money. 500 mil this quarter, 400 mil last quarter, 400 mil last quarter, a billion the previous quarter. Like when you're only worth 6 billion, losing 500 million is devastating. And another terrible thing they're doing is diluting you as a shareholder, because that's how they pay off these net income losses. And look at how they've leveraged up. The liabilities used to be 57% of the assets. Now it's 72. So everything's heading in the wrong direction at Lucid. Are they growing the sales at least? Let me see. So yeah, the sales are growing. At least the sales are up by 29%. But again, those net income losses, like there might even be a real chance of bankruptcy, and it's kind of being priced in right now. Hey, Nikki said CMG stock, Chipotle. Yo, I love this stock. I actually think they're probably a safer bet than Kava. You've heard of that stock, CAVA stock. I'd rather buy Chipotle right here. And I do honestly think they're probably going to fall a little bit lower because, so check this out. Here's why they gap down on earnings, in my opinion. So if we look at Chipotle's multiple right here, they trade really expensive. So if we go to their net income multiple, which is the PE, they trade at 38 times. This is after their huge dip, mind you, because before this, they were trading at 45 times net income, but they're trading at 38 times net income. It's okay to have a high valuation as long as you're high growth, but the growth is kind of slowing at Chipotle. The sales are only up by 3% year over year. I think investors weren't too happy about that. I think investors want to see more than just 3% revenue growth. Then margins also fell. The net income fell by 4%. So that means the margins fell by 7%, which isn't great, but I still trust this one. They're still printing money. I mean, if we look at these net income numbers, 400 million in net income every quarter, very nice. But they're still trading expensive, and that's why I think they could potentially go under $40. But I still really like them. Hey, nice. Hey, what up? Here's Johnny. Good to see you. Yeah, I updated my profile picture. Thanks. It's good entry for AMD. What up, Guran? How's it going, sir? So I do own AMD. Check that out. They're down in the overnight market. Is there anything up right now? UiPath. Futu's up. Let's go. Zoom is up a little. But anyway, again, the market is open right now. But yeah, we do own AMD stocks, so I might be biased. But let me give you my quick analysis on AMD for you. Here's why I think this is one of my more favorite semiconductor plays right here. AMD versus Nvidia. Nvidia has outperformed AMD, but I don't think it'll be that way for the future because Nvidia is a $4.4 trillion company. If you buy them now, for you to double your money, Nvidia has to go to 8.8 trillion. So here's what's pretty cool about this. This is their PC GPU market share. Obviously, we know they sell GPUs, and AMD has what was the market share? A 17% PC GPU market share, pretty good. That's where this gaming revenue is, and the client and gaming revenue is up by 69% year over year. So that's growing nicely, as well as another business growing like crazy has been the data center business on AMD. So if you didn't know, data centers need GPUs, and AMD, makes their own GPUs, so they can just supply them themselves. That's what's pretty cool. I remember talking with you about AMD when it was at 110. Yo, remember, Joseph, everyone is calling AMD advanced money destroyer, and they were kind of at the time. But now AMD, people are really starting to finally take them serious because they're really growthy again. And they're making profits as well. If we go to the FCF, which stands for free cash flow, record free cash flow quarter, $1.73 billion, up by 4x year over year. The net income was $872 million, also insane growth rate. They have an insane balance sheet as well. No net debt on AMD. So I just really love them. What would happen? Yeah, hey, Nikki, I'm on a brokerage right here where you buy stocks. It's my favorite one. If you want to get it, it's in the link tree in my bio. It's that very first link there. It's an affiliate link, full disclosure. Or you can just type it into Google. It's just a broker called Moomoo. But yeah, check that out. Oh, yeah, I keep my cash in here. If you look in the middle of my screen, because it earns you daily interest. So I just keep it in here instead of high yield savings account. Yeah, pretty cool. All right, let's keep going here. Let's see. UNH is my biggest holding. Oh, here's another cool feature. If we go to Warren Buffett's portfolio right here, Warren Buffett actually just bought a bunch of UNH. We can see his portfolio changes and his new position. He bought 5 million shares of UnitedHealth Group. He also bought some of the home builders like D.R. Horton, Lamar, which is a billboard REIT. Sirius XM, Lennar, Pool, 2 more residential. And here's the cool thing. You can like follow these super investors in their trades. Because again, by SEC law, like Buffett, Nancy Pelosi, since they're super investors and their net worth is worth over 100 million, all their trades literally have to be made public by SEC law, which is pretty cool. But let's go look at UNH right here. Warren Buffett buying United Health has really sent the stock up like crazy because, Warren Buffett always does his due diligence before buying a stock. So it was a good sign. And he actually bought his shares at around $320 a share. And it's still pretty far below that today. Yo, no way. He who shall. Thank you so much for the rose there, man. I really appreciate that. He said, MR, yeah, we'll check out that stock after this. I got you, man. Thanks so much. Hope you're having a good holiday. Happy Monday. So United Healthcare, they have a pretty nice dividend. You get a 2.8% dividend yield. I'm sure Buffett likes that as well. They're trading at a very low valuation just because the future is uncertain. If you look at this PE, it says 13. They're trading at 13 times net income. We're a customer. We actually use their OptumRx business. The OptumRx sales have actually been growing like crazy, up 19% year over year, $38 billion in revenue this quarter. But again, this is why the multiple, the net income, the PE multiple is so low because the net income is expected to fall to just $1.70 in 2 quarters. This $1.70 quarter, if analysts are right, they won't even be able to afford the dividend with that net income that quarter. So I do like UNH, but I wouldn't buy them at this $310 level. I'd honestly wait for under $300 a share to really meaningfully buy more. I'd be very careful with that one. I'd be slow to dollar cost average because they're still in some government regulation issues, being accused of fraud and stuff. But a lot of that's priced in already. So and Buffett just bought it too. Oh, this is a yield max company. So yeah, you look at that, man. This is unfortunate. So This ETF started in 2023. It was October. It was $20, and now it's $1.70, dude. So this ETF has literally lost all its value. It's literally hit an all-time low on the most recent trading day. So you basically buy these to maximize your dividend income. It says they have 180% dividend yield. They don't actually. Just whenever the stock price goes down, it makes the yield look higher. They have nowhere near that yield, but the future payouts always go down on this company. These are just kind of like a slow bleed out of your capital. I would be so careful with that one. It's just basically you maximize your dividend income with it. Because it's tough holding that. Like you saw, it literally went from $20 to under $2. It's tough. Gotta look at the total return. John said, what's that? Yeah, hey, John, again, this is a brokerage right here. It's in the link tree in my bio, the very first link there. Yo, Jay, Rich, Bean, thanks so much for the rose there. He said Adobe stock. Let's do it. And yo, audios, he said CoreWeave. Remind me to look at it, CoreWeave. I'll do that one for you too. So, and Wix stock. Yo, Wix.com. We could look at that one too. What about Supermicro? Oh, I own Supermicro too. Remind me to look at Supermicro, JL. I do own them, but I wouldn't buy them at this price. I feel like they're going to go lower. But here's Adobe right here. This is that software company. They own Photoshop, After Effects, Acrobat. So many nice products that I use. I'm on Photoshop like nearly daily. Hey, subscribe to my YouTube channel. It's called Nathan Robert. I'm streaming on there as well. And I sell nothing, by the way. I have no course book, nothing. But one thing that's really been hurting Adobe is really the thesis here, because a lot of people have been using, like I just seen a guy make an incredible logo in ChatGPT that may take me a long time to make in Photoshop. So in 10 years from now, will we need Photoshop and After Effects is kind of why the stock's been struggling. But I think that that's mostly priced in right now, and I think it's worth looking into. They're doing massive buybacks right now. They're trading at a very low multiple, like 22 times net income. For Adobe, a huge company, I think that's worth it. The sales are growing by double digits. Sales are up over 10% year over year. They're printing money. I mean, 1.7 billion of after-tax net income a quarter. The free cash flow is even better. That's what FCF stands for, free cash flow. Over 2 billion of free cash flow a quarter. I love these numbers. Yeah, these net income numbers look great. And what are they doing with all this net income since they don't pay a dividend? Well, they're doing a ton of share buybacks. And here's how you can tell. We go to the EPS right here versus net income. Come on, EPS. Sorry, my Wi-Fi is bugging right now. But yeah, the net income is up by 7.5% year over year. So net income's up by 7.5, but net income per share is up by 12.9. That's because the share part of the ratio went down by so much. So I think Adobe's worth buying right now. Not financial advice. Wouldn't have it as a huge position. It's hard to fully trust them in the long run. But I definitely think it's worth a small position to just hold for the next couple years and see what happens. I think they've overpriced the thesis there, being hurt. All right, so is CoreWeave a buy at 100? Yeah, let's do it. So what up, Johnny? How's it going? So CoreWeave, that's a huge company owned by NVIDIA. NVIDIA basically backs this. I believe they're the largest shareholder now. They did just IPO, so they haven't been public for too long. But wait, what is this right here? CoreWeave faces a flight to buy amid. Oh yeah, they're buying Core Scientific, which is a Bitcoin mining company. So they're about to buy this Bitcoin mining company, which is pretty interesting. But here's what I love about CoreWeave for the most part is how growthy they've been. Like the sales were 400 mil the same time last year. Now it's 1.2 bill, 3x increase. Bad news, they're still burning through a lot of money. They're losing a couple hundred mil a quarter. Analysts are expecting them to continue to lose a couple hundred mil a quarter, but the analysts are also expecting the revenue to just keep on skyrocketing higher. 1.78 billion 2 quarters from now. So it's tough. Honestly, I think that one should be worth, 5 to 10 billion less on market cap, maybe about 10-20% lower, but they're worth looking into. I like IREN as a better play too. Okay. What about Honest and SoFi? Let's do SoFi. I haven't done SoFi a single time tonight. Also, I'm curious, how is SoFi doing? Yikes. So SoFi is down by 0.5. No big deal. Is anything up right now in our portfolio? UiPath, Futu, nice. Okay. So here's SoFi Technologies. They're now $25 a share. I can't believe it. I've owned this stock for a couple years, and I didn't think it happened so quick. But here's why they deserve it, man. This is what I also didn't expect. Here's what blew me in a. That sounded bad. Blew away a bunch of investors. Like, look at this financial services growth that. This is the best part. It grew 105% year over year after growing 80%, after growing 222%. So they just continue this growth. This financial services revenue just hits a new record every quarter. In 2020, the revenue was nothing. 2 mil, 3 mil, 6 million this quarter in 2021. Now it's 362 mil this quarter. Immaculate growth. Also, their main business, the lending revenue, is also growing like crazy. I believe it's also at a new record. Yeah, up 31% year over year to a new record. So both main segments of business are growing like crazy, and people are just taking them serious. They're making net income every quarter. 100 million of after-tax net income this quarter. 80 mil last quarter. 300 mil this quarter. So, and the sales growth is nuts. Up 42% year over year. So people are really taking them serious, and they're beating the analyst expectations. They had a huge beat on revenue, beat on net income, and beat on EBITDA. So SoFi's just done really good versus analyst expectations. Yo, Jeff Mack, good to see you, man. Thanks for being a member. Good to see you. I hope you're having a good Monday. He said, yeah, we'll look at bullish after this. Let me look at SEZL first, because this is a really great fintech stock. Can you check some gold company? Yeah, my favorite gold company is RGLD. We'll look at them soon. So, then we could look at MU. Sorry, Malik. Yeah, sorry if I don't get to all the stocks here. I really try and go quick to get to all of them out of respect for everyone. So here's Sezzle right here. This is a fintech. I honestly would put this one on your watch list. I really think this is going to be a monster performer. So the revenue is super growthy. It's up 80% year over year, 98 million of revenue. Out of this 98 million of revenue, 27 million of it was net income. I know it said the net income fell by 7% year over year. It technically didn't, because this was a one-time adjustment the same time last year. But the margins are incredible here. Guess there we go. So yeah, the operating profit's actually up by 100%, and the margin was a 27%. This company has 25 to 35% net margins, and the margins are just expected to keep on growing as well. So Sezzle, in my opinion, from a financials point of view, is a great hold in my opinion, and they just gapped down. So I think it's worth buying now more than ever. Not financial advice there. So let's look at BLSH. I think they just IPO'd. So this is bullish. I think they're crypto related. I don't remember what they do. So they fell 9% on Friday. Not great. Let's go see what their financials are. So yeah, they haven't reported earnings since they IPO'd. Yo, Ran, what's up, dude? Thanks so much for the rose. I really appreciate that. So, dang, sorry, man. My Wi-Fi is just not great right now. So there's no analyst expectations The revenue, it says it's down. So from the same time last year, the revenue fell year over year. They've lost a bunch of net income. I don't like seeing negative growth. Oh, here's where the revenue comes from. Notice none of it says the US. So most of the revenue comes from Singapore, then UK, rest of world, British Islands. So that is one thing to be careful with where the revenue comes from, but they're interesting. I think they're crypto related. I don't remember. So what up, B69? He said Baba stock. Yo, this is that Chinese, basically Chinese Amazon. Uh, they just announced they had bad earnings, but on earnings they announced they're going to make their own chip, their own GPU to fill the void that Nvidia has because Nvidia can't ship their chips to China anymore. So Alibaba's saying they're making their own, and that's why the stock went up so much. Because if we look at their actual earnings versus the analyst expectations, they missed on revenue, they beat on net income, but this was actually a one-time gap adjustment. They didn't really make this much EPS. It was technically basically right around what the analysts expected, and they missed on EBIT. But I still really like this company. They're still printing money, like literally. If you averaged out here, 4 to 5 billion of USD net income a quarter, very nice. What was the sales growth? So yeah, the sales on Alibaba were only up by 3.3% year over year. But what was the free cash flow? Good, positive free cash flow. You also get a dividend with them now, 0.8% dividend yield. But I'd probably rather just own Amazon over Alibaba. That's like the Chinese Amazon. They're an e-commerce site, but also they're more business to business, more than business to consumer like Amazon. So, um, yeah. Oh yeah. So someone said a gold company. Let's do RGLD. So yeah, hey, congrats on IREN Plasma. So this is my personal favorite gold company. Besides just owning the commodity of gold, ticker symbol GLD or IAU, this is one of my favorite gold stocks. They actually, I wouldn't buy the gold mining companies. This is a unique company. They actually collect a bunch of gold royalties and high margin royalty streams, which is pretty cool. So yeah, there's stream interest and royalty interest. Like they have incredible margins. The royalty interest, royalty revenue is up by 50% year over year. Stream revenue is up by 9% year over year. But check this out. Sales are up by 20, but net income is up by 62. They're growing their net margins. They have ridiculous margins, a 63% net margin, up by 35% year over year. So incredible margins. Also a monster balance sheet. This is why out of all the gold stocks, I like this one. They have 250 mil of cash, no debt. Also, and a bunch of gold on hand. And also, you get a 1% dividend. So you get exposed to gold with the dividend. And yeah, that one's pretty cool. Hey, what up, Denny? Do you think UiPath is a buy still? I do not think UiPath is a buy still, but I'm just not selling out of them. Christonio, what's up? He said Visa stock. You know who actually owns a Visa stock? Is actually, where is this? Nancy Pelosi. So if we go to Nancy Pelosi's portfolio right here, super investor got to make all her trades public. 2.4% of her portfolio is in Visa. I think this is another great never sell stock. Those small little credit card transaction fees that are slowly bankrupting us are making Visa a boatload of money. They have a shared duopoly with MasterCard. But check out this after-tax net income. They're making $5 billion of net income every single quarter. And what is Visa doing with $5 billion of net income a quarter? Here's why the stock just doesn't go down. They legit spend all that net income, nearly, $5 billion of net income a quarter, every quarter buying back their own stock. And here's what that does for you as a shareholder. Net income's up by 8%. But net income per share is up by 12% since there's less shares that exist. So you own 3-4% more of the company. Plus they grow their dividend yearly. You get a dividend. So pretty cool. What up, yo, Keeney? Again, I'm on a brokerage right here where you buy stocks if you want to get it. This app, it's in the link tree in my bio. It's that very first link there. But yeah, Rand, thanks again for the roses there. He said COMM. So I actually have heard of this company before. What stock was that earlier? Oh yeah, hey, that was RGLD. RGLD was that ticker symbol. For that gold stock. But here's the company you were talking about. This is CommScope right here. If you're wondering, why did CommScope just have this huge gap up? Oh, dang it. Hold on. I got to reset. Dang it, Moomoo. Okay. There we go. Should be fine now. All right. So CommScope right here, they just this company had too much debt before today, and they just sold their broadband business, which was pretty much their entire business, to Amphenol Group, which is a stock that I own. So yeah, check that out. That's why they gapped up right here. It was great news. The stock went from $8 to 15. I remember it that day. Um, but yeah, if we go to right now, check that out. They have $8.9 billion of debt. Um, it was tough for them to pay this off because they really weren't making any money. Um, you know, this was a one-time adjustment from they sold another business off to Amphenol and got money, and now they're selling the rest of their business to Amphenol Group. So basically, this company now has no debt whatsoever. They gave all their debt to Amphenol Group, and it's basically just saved the company. So all those assets now go to this stock right here, ticker symbol APH. So that's my side of the bet. I love Amphenol Group. They've been one of my best performers. Do you think Circle will take some of their business? Maybe, Jay. But I think Visa will also innovate, though. So here's a stock I don't really like, to be honest with you. This is Marathon. This is a Bitcoin mining company. And here's the thing. I've never seen a Bitcoin mining company outperform Bitcoin, like in the long run. Not a single one. CleanSpark, Hive, um, any other Bitcoin mining company, they just don't. I don't see the value in these. Like, but let's go look at them nonetheless. You go to the balance sheet for these companies. You basically just do a a net asset value of the Bitcoin holdings. But yeah, to be honest with you, nothing's blowing me away there. I'd rather just own actual Bitcoin. All right. Oh yeah, let's get to MU right here. This is Micron Technology. I think this is stock is like finally a good buy. It's tough buying it before the past 2 quarters, but they're finally a good purchase. They're trading at a really low multiple. They're trading at 21 times net income, for a semiconductor play. That's pretty fair. Remember that multiple, 21 times net income. Here's why I think that could go up to maybe a 24 or 25 because they're extremely growthy. The computer networking business is up by 100% year over year. That's incredible growth in the computer networking business, and that's most of their revenue. And they're also beating quite nicely on the analyst expectations on all three metrics: revenue, net income, and EBIT. But yeah, the sales are up by 36%. Net income is a $2 billion. That's ridiculous. If we zoom out to last year, this was a tough buy back then. They were losing over $1 billion of net income every quarter. Well, now they're making over $1 billion in net income every quarter. These are incredible growth rates. So very good balance sheet as well. So Micron Technology also has a nice yield, a 0.4% dividend. So they're like a value chip play, kind of like Marvell. I know it's not your favorite kind of play, but what do you think of AEVA? What's this one? What do you think of ServiceNow and Viking? Yo, actually, let me look at this one first. So here's Viking Therapeutics. This company's in some water because there was so much hype around this company back here. So on this day right here, I remember because they were on my watch list back here. They got FDA approval. They were finally able to sell their prescription. So the analysts were like, let's go. They should finally have some revenue in 6 months. But it's now been 3, 6, 9. It's been basically 2 years, and they still have not sold a single thing. They're basically a startup still. If we go to the revenue, it says 0 because this company has still yet to sell anything. And they're also now losing a bunch of money. 65 mil this quarter, 50 mil last quarter. The losses are kind of getting worse. So that's why I think analysts are a bit worried, and that's why they've been selling off. Luckily, though, this is the great news. They have a boatload of cash. The cash is depleting slowly because their losses down 15% year over year, but still they have $800 million of cash. That's still, if they lose 65 mil a quarter, that's 3 years left of cash. Hopefully by then they can have some sales, but I think investors want some sales on that company. Okay, let's look at which one should we look at? Oh yeah, AEVA. Then we can look at Oscar, ServiceNow. Is it worth buying Amphenol? I think it's worth buying Amphenol, but not at this price. I need Amphenol $5-10 lower. Under 100, it seems safe, but it might not get there for a while. So I just put them on the watch list. Hey, what up, Sum? So here's Aeva Technologies. Check out the top right, the market cap. They're only worth $800 million. So let's go analyze them, though. They've been bleeding out. Look at that stock price. They've been slowly bleeding out. So I am curious on what happened. Maybe they had some bad earnings. But yeah, my Wi-Fi has plummeted like Lucid stock. You're right. So check out the product revenue right here. Let's see how that's doing. So that's it's only 4 million of sales. So this is again a very small company. Let me see just the total revenue. So yeah, dude, I might have to like. I do apologize that my Wi-Fi is terrible tonight. It's never like this. Hey, if you wanted the follow button, by the way, we go live every single day. I mean, someone must be downloading a game or something. I mean, this is ridiculous, but sorry. But this is good news, but also, God, the revenue is very small. It's only 5 million, so it's kind of easy to grow this number. But here's the bad news and why I'd stay away from this stock. They lost 200 million of net income this quarter. 40 mil last quarter, 40 mil last quarter. That's so significant when you're only worth $800 million. Losing 200 million is literally devastating. Oh my goodness, look what that did to the balance sheet. Oh my goodness, that's terrible. The liabilities are now, this $200 million net income loss has to come from somewhere. So they had to raise debt. And it's just the assets are at the lowest point they've ever been at. I'd be so careful with that stock, to be honest with you. Hey, see you later, Ford. Hope you're having a great Monday. Yeah, we will be live tomorrow. I appreciate y'all. Um, all right. Yeah, don't worry, Plasma. Always. GME earnings. Let's do GameStop. So this company, there's really only one thing I see a value on this stock because every time the company goes up, they dilute you, but it has fortified their balance sheet and actually they've diluted you so many times at this point that so much of their market cap is cash. So kind of think about this logically here. The whole company is worth exactly $10 billion. So you're buying into a company at a $10 billion valuation, and they have no debt whatsoever. So GameStop is debt free and has $6.4 billion of cash. So literally 65% of the entire market cap is just their cash on hand. Again, the business is terrible. I mean, look at these huge declines in the revenue. I mean, the revenue's down 17% after falling 30%. So the business is doing awfully, but they just have so much cash, cash on hand. But they'll probably continue to dilute. All right. So, oh yeah, I forgot to get to Super Microcomputer. I apologize. Let's do it. So, Super Micro, we are down they're down 0.82% right now. Here's why I'm personally not buying Super Micro, and I would wait more to buy this company. I think they're going back under $40 a share. Like, even if they don't, I'm okay. But here's why I think they might do that, and I'd be hesitant to buy even right now. I'd wait a little longer. So the sales are up by 7.5% year over year. So the sales are up by 7, but the profits, the net income is down by 34. And this was real. This wasn't like some one-time adjustment. And that means their margins are collapsing. They're giving customers bulk deals. And so the margin is literally just a 3.39%. They just sell commodity. So the margins are collapsing on this company. It's very unfortunate. So that's why I'd wait to buy Supermicro. Oh yeah, hey, let's do Zscaler. Let's check it out. And HROW. What up, music? Let's do HRO. Hey, thanks for joining the YouTube stream. I appreciate that. Yeah, hey, by the way, best way to support me, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. Best way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I'm streaming on there as well. But here's Zscaler. Here's what I love about this stock. They're in the cybersecurity industry and they're so growthy. The sales are up by 23% after going 33, after growing 46. So the revenue, as you can just kind of see by these blue bars, just hits a new record every quarter. That's insane growth. They are still struggling with net income positivity, but it's all right because they're literally losing like no money. 4 million, 7 million, 12 million. So this is no big deal that they're barely losing any net income. Probably by this time next year, they'll be net income positive. Yeah, we can see the losses are expected to keep on narrowing and they keep beating on expectations. So maybe they'll get net income positive faster than analysts expect. Yeah, 750 mil of revenue in 2 quarters. Just that's crazy. So I love how growthy they are. I think they're also an S&P 500 contender. They might be in the S&P 500. Hey, what up, Hyperlink? He said, Roblox stock. You know what? That's owned by Kathy Wood. Let's go to the Kathy Wood portfolio. Hey, thanks, Judith. I appreciate that. Oh, I forgot to look at HRO. You know what? Music. Don't worry. After this, we're looking at HRO. Don't worry. So here's Roblox stock. This is that like gaming, or they own Roblox the game. If you've heard of that before, it's really popular. And I would personally stay away from this stock at this valuation, but here's one reason why the stock has been rallying so much. This is a really cool metric we get. This is their daily active users, and their daily active users are at 111 million this quarter, when the same time last year it was only at 79 mil. So it went from 79 million daily to 111 million daily active users. That's very nice. And the free cash flow is incredible. They're making a couple hundred million of free cash flow every quarter, but since they have so much stock-based comp, like literally hundreds of millions of stock-based comp, paying employees with stock, they lose GAAP net income. Stock-based comp's included in GAAP net income, but it's not free cash flow. So that's why they're literally burning through like 200 million plus in net income a quarter. So that's one thing I would like to watch. The losses aren't the losses worsened by 35% year over year. So we do want to see those losses start to narrow because they also are a bit leveraged, pretty much the same amount of liabilities as assets, and you can't pay off liabilities if you're burning through 200 million in net income a quarter. It actually adds to it. So that's one thing I'd be careful with about Roblox buying it in. There we go. Especially at this valuation. So let's look at HRO. Let's do it. HROW. This is Haro. Haven't heard of this stock before, but let's see how they're doing. They're pretty small. They're only worth 1.44 bill. But let's see what they do. So branded. Well, whatever this is, this revenue is up by 55% year over year. So that's some nice growth. And then it's Imprism at RX. That's flat year over year. So the revenue grew by 30% year over year after growing by 46. That's very nice. And was that real? That was real. They made net income this quarter. So that's great news. Are they expecting to continue that? Yeah, for the next 2 quarters, they're expected to keep on making net income, record net income. And the sales are supposed to go to 100 million. So that's actually pretty interesting. A $1.6 billion company, that's probably going to be making, they're going to be making 50 mil plus a year. They're probably interesting at this valuation. So, hey, red or green, what's up, man? Oh, yeah, we got to look at Oscar Health. We'll look at Oscar Health first, OSCR. I remember looking at SYS last time. Let's do it again, red or green. SSYS stock, let's do it after this. And the SCHD, that's a good ETF. That's a dividend growth ETF. Okay, so boom, estimated 245 EPS next year. Oh, what was the stock price? Divide that by the stock price, and then you get a multiple. Okay, then you get a forward PE. There you go. So Oscar Health, this is the company that's really taken market share away. This is a Medicare, Medicaid business. And Einstein, thanks again for the rose, Einstein. If you got a stock you want me to look at, let me know. I'll check it out for you. But just check out the growth on Oscar. It's ridiculous. In 2020, for the full year, it was 600 mil of revenue. Now it's 9.2 billion. I mean, literally, I can't believe it. It's going to be over 10 billion of annual revenue from now on. The sales were up 30% year over year after growing 45, So sales have been so growthy, but they're still struggling with net income positivity. There is, especially with the regulation headwinds around them, but they did make a lot last quarter. They made 275 million net income last quarter. But I just love how growthy the sales are. I might almost like them more than UnitedHealth at this price. So let's look at SYSS. Then we could look at CLS. Yeah, Celestica. We'll look at that one too. What up, Delaware? So SSYS. I did that wrong. So this is Stratasys. I really tried to pronounce that there. Stratasys, I think. So $900 million market cap, a very small company, and the stock hasn't done too well. The stock is literally the same price that it was back in 2003. So that's not great. So they sell products, and that might be why the stock's not doing too well. You can see that the business isn't growing. Services revenue also not headed in the right direction. So the sales are up by 0.03. And they're burning through 10, 20 mil a quarter, 40 mil that quarter. To be honest with you, nothing's really blowing me away here. I mean, the sales aren't growing. They're only worth 900 mil. So how much have they lost the past year? 10, 20. They're worth 900 mil and have lost nearly 100 million of net income in the past year. So I think that one's tough to buy. All right, so new profile picture. Yeah, Adrian, we got the new profile picture. Boom. Oh, Boom is actually a ticker symbol Oh, let's do it. I didn't even know that. Oh, wait, hold on. Now, I said I'd look at this one first. Let me look at SCHD, then we can look at CLS, and boom. Hey, what up, Cruz, my brother? I hope you're doing something fun this long weekend. Hey, thanks, man. Yeah, I hope y'all having a great Monday. So here's SCHD right here. This is a nice dividend growth ETF. It owns a lot of the higher yielding, like Buffett stocks, like Chevron, Coca-Cola, Pepsi, ConocoPhillips, AbbVie, Home Depot. So I do like this ETF. I don't expect this one to outperform the S&P, but you get a nice, probably will get 6-7% returns a year, and you get over 1% of your money back in a dividend a quarter, and qualified dividends too. So let's look at BOOM. So DMC Global, he said estimated $2.40 or basically $2.50 of EPS next year. So let's go check him out. Unfortunately, the stock is at an all-time low. I don't know if he's talking about the stock, but let's see. The stock is at an all-time low. What's the market cap? $137 million market cap. So that's a super small market cap. The revenue is down by 9% year over year. Yeah, I'm not seeing. I'm not seeing that. They are expected to make net income the next 2 quarters, which is good. But nothing's impressing me here. Assets are falling every quarter. Revenue's falling every quarter. Losing a lot, like 150 million net income loss. That's devastating when you're only worth 137 million. So I'd be very, very careful with that one. So, hey, what up, Adrian? He said qubits. Let's do it. So this is that quantum momentum company. I'm surprised it's done so well. So what's the market cap again? A $5.4 billion market cap. And are they issuing shares? So look at this. If you're wondering what happened to the balance sheet, here's honestly, it's kind of good news, but they have 820 million of cash. If you're wondering how did the cash go from 300 mil to 820 million, well, that's because they literally diluted you by 530 million this quarter. They issued $530 million of stock, and I don't blame them because that was actually genius in them because the stock was so overvalued. But that they really fortified and beefed up their balance sheet. So actually, about 16% of the market cap is just cash on hand. But do beware, there's no sales here really. 3 mil this quarter, lost 170 mil this quarter, another 100 mil that quarter. So it's a mixed bag there. They're just really momentum-y right now. So yeah, hey, I wouldn't trust that one for the long run. I'd kind of, if I was up, I'd trim them slowly. Hey, what up, Ray? Hey, thanks, man. I appreciate that. He said BMNR. Yeah, we'll look at that one next. I wanted to look at Celestica real quick for Manziel. Let's do it. So here's Celestica. This one has been a monster performer. Congrats if you own this one because it's pretty much at an all-time high. Yeah, they're in the popular business, the connectivity and cloud solution business, and it's holding on to these gains. The sales are up 27% year over year. To a new record pretty much, besides this one little quarter here. Also, the advanced technology business is up by 7% year over year. They really had a huge beat from the analyst expectations. If you're ever wondering why did the stock gap up so much in earnings, well, go check what did the analysts expect, and we can see huge beat on revenue, huge beat on net income, almost a beat by 100% on net income, and they beat like huge on EBIT. So it was a triple beat quarter. 200 mil of net income, a record net income quarter. So Celestica is pretty cool. That's CLS. Rockulab and AST. Yeah, hey, I would sell ASTS. Rockulab is all right. I still think their market cap's a bit high, but actually we could look at Rockulab too after this. So, but ASTS I don't love. Here's Bitmine Immersion Technology. This is just an Ethereum staking company. So Tom Lee works for the company. Bitmine is basically just an Ethereum holding company. And you just look at the market cap based off the net asset value of all the Ethereum they own. So it should just do whatever Ethereum does. I wish I could say more about the company, but should just kind of move with Ethereum. Okay. Thoughts on a down market the next 4 days? Let me see what the market's doing right now very quickly. We are, hey, no way. Market just went green. The SPY is now up by 0.01. Tesla went green. SoFi went green. Pretty cool. So overnight market is positive. Pretty nice. And we're up by 0.05. How about the Roth? Actually, let me check the Webull account real quick. Yeah, hey, no way. Let me go check the green stocks. So UiPath is green. We're seeing a nice little page of green now. SoFi went green, Reddit, Disney. So yeah, those are my stocks. I do not. P Morris. Um, okay. Um, what up? Someone said HG stock. Let's see. Yeah, if you guys got any, or actually, I wanted to pull up Rocket Lab. Then we can look at Affirm, HG, CTM. I want to check these out. So here's Rocket Lab right here. There's some good news and bad news about this stock. They just completed their acquisition of Geost, which is pretty cool. Rocket Lab achieved 70th Electron mission milestone. Neutron rocket development, strong Q2 results with 36% revenue growth. So cool. Rocket Lab added to Bloomberg 500 index. Oh, another company that I know just got added into that. I forget what it was. Comfort Systems. What's the market cap on them? Yeah, $23 billion. So nearly worth the same as Comfort Systems. But check this out. Here's what's so cool about Rocket Lab. It's how growthy they are. The space systems revenue on Rocket Lab is up by 27% year over year after growing 95%. So they're holding on to that growth, continuing the growth. And also, that 67% of the business, their launch services business, is up by 59% year over year. So pretty cool. They also just completed the Geost acquisition. It's going to help out the sales even more from some inorganic sales growth. Bad news is they're still burning through quite a bit of money, 50 mil a quarter, 200 mil plus a year. But let's hope those narrow as the sales grow. And they have a huge backlog. I think they have like a 1.5 billion backlog of orders. So yeah, let's do this one. Deku Pass said HG stock, Hamilton Insurance. So my insurance company, the only insurance company I own is actually Progressive Corp. Let's see. They're a very small one. They're only worth $2.4 billion, but let's see how they're growing. They're growing very nicely, actually. The sales are up by 25%, and they have incredible margins, or at least they did this quarter. 36% net margin. They made $260 million of net income on that. So yeah, look at this multiple. They're trading very cheaply for the average insurance company. They're only trading at 6.5 times net income. So, what kind of insurance are they in? They do casualty insurance. Okay. Oh, they're in London. Wait, where did the revenue come from? Oh, it's not going to break it down. Oh, well. So anyway, that's a cool insurance company. Low-key have some fire picks for you. UP. Oh, yeah, let's check out UP. Let's do it. Oh, wait, E said Hood stock. You know what? We got to cover Hood first. I'm going to look at UP. So what's a good one then? Hell, I like Robinhood. My favorite, hey P, and my favorite brokerage is this one right here. Lowest fee, most useful brokerage in my opinion. Is this one I'm on right here. It's in the link tree in my bio, very first link there. Brokerage called Moomoo. I also have Webull and Robinhood, but this one's my favorite right here. If I had to start new, I'd just get that one. But let me show you. Robinhood stock. I'm going to my Robinhood account. Robinhood is actually my best performing stock of all time. I regret every share I've ever sold to them. I actually have been holding this stock literally since the IPO. Let me see, they're my buy orders for Robinhood. I had some more before this. I've sold most of my position for a huge gain, but I still have a few shares left. Let me show you why Robinhood deserves to be at over 100 a share. They're so innovative, so growthy. They have incredible margins. Check this out. So the sales are up by 45% year over year. Incredible growth. They made $990 million in revenue. Kind of remember that number. $990 million in revenue, and $390 million of it was after-tax net income. The Robinhood Gold subscription is making them a boatload of money. They're making a couple $100 million net income a quarter. People are really taking them serious. 40% net margin. 40% last quarter. The brokerages just print money, especially Robinhood. Futu as well, Interactive Brokers, all of them do. Yeah, no problem, Deku Pass. So let's look at UP stock. So Wheels Up Experience, huh? So a $2 billion company. The stock is kind of near all-time low, but let's go analyze them. Yeah, check them out. In the past couple of days here, there was some huge news and the huge volume spike on this day. And ever since then, the volume's been nuts. I wonder what that news is. And without that news, I I don't know. $50 million agreement. I don't know. Okay, let's go see what they do. So they do flights net of discounts and incentives. So the flight revenue is down by 3% year over year after falling 30% the previous year. So looks like they are in the flight industry. So to be honest with you, this isn't looking great from a financial point of view. So yeah, the sales are down 4% after being down 40. They burn through 100 million of net income a quarter nearly, and they have more liabilities than assets. So this one doesn't really check any of my boxes. There was some good news recently. I don't know what that is, but those financials scare me away, to be honest with you. Have you heard of Rich Tech Robotics? I have. I don't love that one. If crypto tanks, do you think Hood will as well? I do think so, Ray. Or they are correlated because Robinhood follows Bitcoin because a lot of Robinhood's net income actually comes from crypto transaction fees. Man, the market is green right now. I love this. If it load, yeah, the S&P 500 is green and the QQQ is green. Pretty cool. Hopefully tomorrow will be a nice green day. So, all right, let's keep going. Okie dokie. Said OSTX stock. Let's check it out. This is OS Therapies. Okay. They're only, yeah, so we don't really cover these kind of stocks on the channel here. If you look in the top right, they're only worth $75 million. That is a very small market cap. And do they have sales? They don't. So it says no data here because they've literally never sold anything. And they lose net income every quarter. They only worth 75 mil, and they lost 5 mil this quarter. 4 mil last quarter. That's pretty devastating. So I can't really buy that stock till I see some sales. Those financials scare me away. So Nikki said SoFi. Yo, I love, we just looked at Robinhood stock. Here's another company I own. I'm up massive on SoFi as well. Another stock I regret every share I've ever sold of. Let me see here. Let me pull it up. Futu's another great one. We're up 330% on SoFi. So we're up 650% on Robinhood. They've been another monster performer. But let's pull up SoFi right here. I regret every share I've sold to them. They're over $25 a share. Here's why they deserve it. Like, I did not expect this kind of growth with them. Specifically, their financial services business, it hits a new record every year, every quarter. This business has doubled. It's up 105% year over year after going up 80, after going up 3x. So you can just see it hits a new record every quarter. Incredible growth on their financial services. Also for SoFi, the lending business is very strong as well. That's up 31% year over year. So both segments are growing very nicely, and people are taking them serious. They made 100 mil of net income this quarter, 80 mil last quarter. Sales are up by 42. They're beating on every expectation by a big margin. They beat on revenue. They beat on net income. They beat on EBITDA. They beat on EBIT by like legit 40%. Like they're just like great. So, hey, I missed you on SCH. Oh yeah, SCHD. I'll be quick about this one again. This is an ETF right here. An ETF is just a basket of stocks. Instead of buying just one stock, it diversifies you into a bunch of different ones. And this ETF specifically focuses on dividend growth companies. So you get a 3.8% dividend, and these are all the stocks that they own. A lot of the 3% yielding names like Chevron, ConocoPhillips, Pepsi, AbbVie. I love AbbVie. A lot of the higher yielding names. Ooh, so yeah, LVMUY. So yeah, let's do it. Oh, we could look at Eli Lilly, and some of these other names. So this is Louis Vuitton stock. This is um, like a luxury stock right here. If you look at Gucci stock, Tapestry, a lot of the other luxury names, even Nike stock has been struggling hard. Lululemon, a lot of these pricing power, more luxury brands stock have been struggling. But here's why I like Louis Vuitton out of a lot of the other names. First off, you get a very nice yield, a 2.58% dividend yield. Do note they are a European company, so you might have to pay a little ADR fee, but let me convert the revenue to USD. They trade at 20 times net income. And I love the industries they're in, fashion and leather goods, that's their purses, selective retailing, and then watches and jewelry. Those are high margin sales, watches, jewelry, and then also perfumes, cosmetics, drinks. So high margin businesses. But again, The pricing power, their margins have been falling a bit because the actual net income is down by 15% year over year. 2023 was crazy that year, 17 billion in net income. But now we want to watch these year over year growth rates. What are the sales? Yeah, the sales are only up by 5%. We do want to see. But it's kind of the whole environment that's been struggling. I do like that one out of. I probably like Louis Vuitton more than Nike stock, to be honest with you. I haven't looked at this stock in a while. Wynn Resorts. I wonder how they're doing. How are their Vegas operations doing? Let's go figure it out. Wait, are they public anymore? I can't find W. Oh, sorry, there it is. Wynn Resorts. Wow, they've had a nice rally these past couple weeks here. Look at that nice stock price appreciation. But again, if we zoom out on this company on the weekly, do beware. This stock is the same price that it was back in 2007. So I don't really expect this company to outperform, the S&P 500 in the long run. Oh, there it is. Their Las Vegas operations. Let's see how that's doing. It's only up by 1.5% year over year. All right. How about the Wynn Palace? That's down by 1.5. Wynn Macau. I don't know how to pronounce that. That's up by 2%. So it looks like they're just not growing too much. The sales are only up by 0.28% year over year. They only made net income of 76 mil. Actually, they're actually making closer to around 200 mil of net income a quarter, but a bit of a leveraged balance sheet. So I'd be careful with the Wynn. I don't expect them to outperform in the long run. To be honest with you, I would buy Vici Properties. You get exposure to Wynn Resorts. Wynn Resorts is one of their main customers, and this one actually does a lot better. This is a triple net lease, a REIT, and they have a 5.3% dividend. Dude, they own so many properties on the Vegas Strip, the Wynn Resorts, Caesar's Palace, the Luxor, the Las Vegas Sphere. They literally own the land under all those properties, and they triple net lease it out. So that's why they have a sustainable 5% dividend yield. That's a pretty cool one. Vici Properties, if anyone's heard of them. Is Futu still on a good price? So this has been one of my favorite stocks of all time. I think this is the next Robinhood. And here's why I think they probably are going to continue to grind up. If you look on the left there, this forward net income multiple, they're only trading at 21 times forward net income, even though the stock's at an all-time high. So that's why I think they could continue to grind up and maybe go to like a 25 forward PE before they max out. That sends this over, like 200, let's see, 7 times 5. So that would be about $220 a share for Futu. So that's my non-financial advice price target for Futu, $220 a share. I'm not too enthusiastic about buying them right here though, because they have had just such a monster rally recently. Let me get my water 1 second. Sorry. So yeah, good news. The market is up in the overnight market. UiPath is up. Futu's up 1. PSIX. They're pretty cool. So. Futu, actually, let me go over them. If you're wondering, like, what is this stock right here? Why are you saying they're the next Robinhood? Well, again, Robinhood is a brokerage right here. So check this out. This is the Robinhood app right here. They're a brokerage. They're publicly traded. Their hood stock has done incredible. Well, check this out. This app right here, you see this app that I'm on right now? This app that I'm on right now, this brokerage, is them publicly traded. So this stock we're looking at is the app that I'm using publicly traded. And this is why I use them as a brokerage. Again, it's good to know that they're printing money. This is USD net income. They made 330 million of net income this quarter, up 111%. They make a lot of their money from commissions, of course, brokerage commissions, and then interest income. A lot of these brokerages earn interest on your cash. And they also now pay a special dividend every single year. So anyway, this is why I think they're like the next Robinhood. They're a cool brokerage. And it's literally this app that I'm on right now. By the way, if you want to get this little brokerage that I'm on, it's my favorite app to do analysis and stuff on. It's in the link tree in my bio, that very first link there. It's an affiliate link, full disclosure. Yeah, pretty cool. That's their stock. I also own Robinhood stock. I own both of their stocks. I also have a link if you want to get Robinhood as well. It's also in the link tree in my bio, an affiliate link. I like this one because of their Roth IRA match program. But my favorite one is this one right here. But you can't have a Roth IRA with this app like you can with the other one. Okay, let's see here. Mark said IVS stock. What's IVS? So I don't know. Are you talking about this Canadian company? I don't think you are because they're only worth 50 mil. We don't really cover those kind of $50 million companies. Hey, thanks for the follow, Pierre. Yeah, if y'all wanted to follow button, we go live every day. I sell nothing too. I have no course, book, Discord, WhatsApp, Telegram. Only thing I do have is a YouTube channel. So if you want to support me, best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But I'm also streaming on YouTube. So if you miss anything, you can replay it. Sometimes I talk too fast and people miss stuff. So oh, someone said ADA. Oh, Sean, are you talking about Cardano? So yeah, there's Cardano. They really haven't kept up with Ethereum and Bitcoin, but yeah, there's their price. Okay, what's your biggest holding? So yeah, my largest holding is actually Comfort Systems right here, ticker symbol FIX. It's led to most of our year-to-date gains. Like here's where we were buying the stock like crazy. We were dollar cost averaging into the stock back here. And then they just had phenomenal earnings. This is an HVAC company, and heating, ventilation, air conditioning stock. Pretty cool. So E said him stock. Let's check it out. So this is hims and hers. One thing you do got to be aware, and this is why the stock has been bleeding out, is because they lost their partnership with Novo Nordisk, which they used to sell Ozempic on their website. The stock used to sell a weight loss prescription, and it led to a lot of their growth. But now they're no longer selling any weight loss prescription on their website. Let's see. Yeah. So, oh, this is so interesting. Hold on. Novo Nordisk forms partnership with GoodRx to provide discounted access to Ozempic and Wegovy medications following the termination of its partnership. That's very interesting. I wonder when that news came out. So that's good to know. This company, of course, sells a bunch of different prescriptions. They've been so growthy. This is kind of the good part. The sales are up 72% year over year after growing 51%, after growing 80%. These year over year growth rates in the middle are just unbelievable. And that's why, they deserve to be, all the hype around them. They deserve it. They're also making a bunch of actual profits. They're not just some startup. They're making real net income. 40 mil this quarter, 50 mil last quarter. So they're making over 200 mil in net income a year now. Sales are up 72. They have a good balance sheet. If you're wondering what happened this quarter, the assets went up with the liabilities because if you go to their cash went from 300 mil to 1.2 bill. That happened because they issued debt to raise cash. The assets went up with the liabilities. No big deal. So yeah. What do you think of IREN? I love IREN. I always thought this was like a better buy than CoreWeave. They're like a smaller version of CoreWeave, but they're actually profitable. They have same growth, not same number of sales, but same growth rates. But this one's net income positive. Check this out. This is what's so cool about IREN, Iris Energy. It's how growthy they've been. Whenever we look at a stock, we can see they're at all-time highs. Is them being at all-time highs justified? Here's why I think so. Like, this is nuts. The sales went from 56 mil to 187 million in 1 year, a 3x increase. And they also have an extremely good balance sheet. And on this 187 million of revenue, 95 million of it was net income. They made net income last quarter. They made net income last quarter as well, 25 mil, 20 mil. So people are really starting to like this company. They're making real profits. They're really growthy. They have a great balance sheet. So they're pretty cool. So wait, did I look at this stock? IGT stock. These must be on some weird exchange. I can't find that one either. I do apologize. So Lucid stock. So I feel bad if you own this stock, to be honest with you. I would not buy this one at an all-time low. I wonder if there's any news, as Apple tell us. Lucid Q2 deliveries miss market expectations. They announced a reverse split. So the Uber CEO questions camera-only autonomous systems amid Lucid partnership. So that's not great because Uber literally ordered $1.3 billion worth of cars from Lucid, and maybe there's a chance that might not go through anymore. That's why they gapped up and they sold off the entire rally. So basically unpriced in all that news. And they're also doing a reverse split because the stock in the top left is only $1.98. That's not NASDAQ NYSE compliant. You have to be over $5. Or maybe it's $2, I don't know, but that's why they're reverse splitting 1 for 10. Here's why I wouldn't buy this stock either, even though they're at an all-time low. If you look at this market cap in the top right, it says $6 billion. So kind of remember that number right there. The whole company's worth $6 billion, and they lost $600 million this quarter. Pretty much they lost 10% of the whole company this quarter. They lost $400 million last quarter, $400 million last quarter, $1 billion that quarter. So they've legit lost 2.3 billion of net income in the past year. The whole company's worth 6 billion. I think there's legit real bankruptcy risk there. They're also diluting you while the stock's at all-time lows. They've leveraged up their balance sheet. Everything in Lucid's headed in the wrong direction. And that's why I don't think it's worth buying that one, even though they're at all-time lows. I think they're going to continue to slowly bleed out to newer and newer all-time lows. Hope I'm wrong, though, because I don't want to see anyone lose money. So let's do JEPQ. Do you think the market overall, honestly, Cruz, generally, I do think the market's overvalued. And it's tough really doing some meaningful buying of great companies. Like if I go right here to my portfolio and I look at all these stocks that I'm up on, at the valuations of these stocks, I would legit not buy a single stock on this list at this valuation. Maybe two or three. I'd buy some of these. I'd buy T-Mobile at this price. I'd buy Progressive. I'm actually about to probably do this next week. I'm going to buy more Sprouts Farmers Market, maybe TAP. But a lot of these stocks that I love, the real ones you really want to own, you can't really buy them at these valuations like Reddit, SoFi, Robinhood, AMD. It's unfortunate. So I do think the market's a bit overvalued right now. So someone said JEPQ. This is actually if you're kind of bearish on the market, you could sell calls on the NASDAQ. And instead of selling calls on the NASDAQ yourself, you could buy JEPQ, which is a NASDAQ covered call ETF. But again, do beware, the NASDAQ's hit a new all-time high. This one's still quite a bit off all-time highs. That's because these never actually outperform the underlying asset because of the nature of selling calls. So you're buying this to maximize your dividend income. You get a monthly dividend, an 11%, what was that? An 11% dividend yield. And look at its top holdings. It's literally the NASDAQ 100 in the same order. NVIDIA, Microsoft, Apple, Amazon, Broadcom, Google, Netflix, Tesla. And then they just sell calls on it and then pay out their premiums to you as a shareholder. They're not technically dividends, they're distributions. So you're paying short-term capital gains, which is a higher tax than a normal paying dividend stock. But that's JEPQ. You won't outperform the NASDAQ in the long run, but you shouldn't expect that. You maximize income. Not some for the younger investor. Okay, some hyperlink. What's up? He said UUUU. So this is that uranium company. So uranium has really been hot recently. Nuclear reactors are powered off uranium, and we're really sourcing our uranium locally from like Canada. And instead of from Russia, we don't want Russian uranium anymore. And check this out, 93% of the revenue comes from uranium. And there's where the revenue comes from, US, China, Japan, all these other countries. So that's just a uranium play. Another uranium play, if you're looking for one, ticker symbol URA is just the Global X Uranium ETF. And to be honest with you, I would just pick and choose some uranium stocks. I would buy UEC, maybe. They bought a uranium mine from Rio Tinto. But honestly, the very best uranium pick is CCO, Cameco. They're the best one out there, in my opinion. Safest uranium play. But UUU is pretty good. So why do you like Perry? I'm not too happy with Perry. They're one of my biggest losers. Look at this. All those little buy orders. That's where I was buying the stock. I dollar cost average into the stock, and it's not been the right move. I'm down over 50% on this company. But here's why I'm unable to sell out of this stock. It's too cheap to sell. Check out the top right, this market cap right here. Their whole company is worth $415 million. So remember that. The whole company is worth $415 million, and they have no debt whatsoever, completely debt-free, with $318 million of cash. So legit 85% of the entire market cap is just the cash on hand. So they're almost trading at cash of value. One reason the stock's been tanking is because they lost their growth. They lost a contract with Bing. They're an advertising company, so the sales are, after falling 40%, or down another 5%. So the sales have collapsed. They're no longer making really any profits. So I wouldn't buy this stock really right now, and especially not as a meaningful position. It's only $700 for me, my smallest holding in here. And that's why I can't sell it though. It's kind of like Zoom, Zoom and UiPath. I'm not buying more, but and even though I'm down 50%, they're too cheap to sell. Zoom has like $6 billion of cash on hand and no debt. No way, yo, Rock from RJ, thanks, or RI, thanks so much for the roses. I really appreciate that. You got a stock you want me to look at? Let me know. I got you. What indicator do you use? I'm just looking at their financials. I don't really look at indicators too much. This is my favorite app brokerage right here. If you want to get this app I'm on, is in the link tree in my bio. That very first link there. It's an affiliate link too. Oh yeah, Super Micro, dude. So what up, Legend? Thanks. Oh, Legend, thanks for the 5 roses. Thank you so much, man. So for Super Micro, I would not buy the dip yet. I have a gut feeling that Super Micro is going under $40, so I would wait it out to meaningfully buy the dip on this one because the financials aren't doing too well right now. They missed on every metric according to the most recent quarter. So here's the bad news. The sales have grown by 7.5% year over year on Supermicros. So the sales are up by 7.5%, but the actual profits, the net income, are down by 35%. The margins have collapsed over here. They're giving customers bulk deals. So that's why I have a scary feeling Supermicro might go lower. They're still making a lot of money, but that margin collapse scares me. So I wait for them to fall lower. Hey, what up, Catherine? Do SoFi. Yo, we just looked at SoFi. So give me 5 minutes and we'll look at them again for sure. Don't worry. RBRK. What is RBRK? So this is Rubrik. I think this is a software company. Let's go check them out though. So, oh wait, what up, Humongous? What's up? I think stocks are overheated. Haven't had a real correction since tariffs. Yeah, patience. You got to have patience. I agree. Hold up here. Let me fix this. Yep. Uh-oh. Sorry. There we go. Had to reconnect it. The phone is back. Okay, so here's Rubrik right here. This is a software company. They're worth $17 billion. Let's go see how they're doing. So software and services are all their revenue. Actually, let me go down here. To the end revenue. So yeah, the revenue has been beating like crazy on expectations. They're still losing money, but the net income losses are, oh wow, they're losing 100 mil plus a quarter. That's actually very bad. 100 mil losses in net income a quarter. They have a leveraged balance sheet. They have a bit more liabilities than assets. Good thing the losses are narrowing because I don't believe it. They lost 700 mil that quarter. But the growth of the sales is super good. Sales are up 50% year over year, but I would be wary of these huge 100 million net income losses. They're a $17 billion company. I guess the analysts are expecting this. Actually, here's the thing. This is probably why the stock is doing so good. The analysts expected them to lose more than 100 million. So they actually lost less net income than the analysts were expecting them to lose. I'll actually add them to the watch list. Don't know what I just did there, but I'm going to add them to the watch list right here. Yeah, oh yeah, this is the option strategies. I don't really do options, but you can see like the unusual whale activities. But yeah, Rubrik, they're a cool software company, but those net income losses do scare me a bit. So, hey, what up, Ken? What up, Hannah? Hope y'all are having a good Monday. So someone said Whirlpool. Yeah, has anyone heard of Whirlpool before? They sell like ovens, washing machines, that kind of stuff, but this company has been struggling for a while. If you bought this stock in 2007, it's the same price that it is today. So you do got to be careful of that. But let's go see how they're doing. Yo, Rock from RI, thanks again for the 2 roses. Yeah, we'll look at Rocket Lab after this. So here's the thing. Major domestic appliances. So yeah, just appliances, that kind of stuff. Here's why the stock has been struggling. The business isn't really growing. Actually, it's declining. So check that out. After the sales declined 17% the previous year, they're down another 5%. Good news though, they are really making net income every quarter. Technically, they're making around 100 million of net income a quarter after paying. When the go to cash from operations. So yeah, the cash from operations. This is the number that is after the negative debt interest payments. Basically, I don't love this one because of the declining sales growth, but what will happen is in a lower interest rate environment, there's a 90% odds of the interest rates being cut in September. Well, it is September now, so this month actually. There's a 90% chance that interest rates are being cut this month. So that could really help out their sales. That's kind of like some of the restoration hardware, some of these furniture companies, they're really hoping for a lower interest rate environment. Opendoor is rallying on that news. So yeah, housing market is coming back. Yeah, Warren Buffett, here's the thing, if I go to Warren Buffett's most recent buys here, Warren Buffett is putting his money in those sort of housing market stocks. To be honest with you, if I wanted exposure to, the home residential sector and like interest rate sensitive sectors, I would probably not buy a Whirlpool. I'd rather buy a DR Horton or even a Lamar Advertising. This is the largest billboard REIT. They own the 60% market share for billboards in the US. There's no real more billboards coming. Uh, they're all grandfathered in. He also bought Lennar, another home builder. Pool Corp supplies all the basically monopoly for pool parts. Um, Distributor. So Warren Buffett and Berkshire Hathaway has been buying a lot of home building related stocks. So that's what's interesting about Whirlpool. So hey, what up, Aaron? Lee said Rocket Lab, and what up, Dave? How's it going, man? So oh wait, hold on. There was another stock I wanted to look at first. Oh yeah, Rocket Lab, RKLBs. Let's do this one. So here's Rocket Lab stock right here. There was some good news around this stock right here. Achieved 70th mission milestone. So Rocket Lab launches a lot of rockets into space and stuff. They're called Rocket Lab. They're my favorite space stock out there. I'd stay away from Lunar. I'd stay away from ASTS Space Mobile. If I had to pick one, I would pick Rocket Lab, and they're so growthy. And check out the space systems revenue growth. It's up 27% year over year after growing 94%. So they're continuing that growth. And also not just the space systems revenue, but the launch services. That business is up by 60% year over year, also to a new record. So both segments of business are growing like crazy. They also just completed their Geost acquisition, which will add to even more revenue growth, inorganic, but still growth nonetheless. I love it. I still would be careful here, though, because they are burning through quite a bit of money. Trend isn't getting better yet. They're burning through 60 mil plus a net income a quarter, but they're so growthy. They also have a huge backlog, like a 1.5 bill backlog of orders, but they are overvalued, I do think, right here. But they're worth putting on the watch list. Hey man, what do you think of Macy's? Yo, this is a stock you gotta avoid, man. Macy's, the mall company, is if you bought this stock in 1997, you are down by 30% on your position. So again, I can't really recommend this stock. It's one that's like if you just want to buy and hold a stock forever, I'd rather just pick the S&P 500 over Macy's. What's the yield? You get a 5.3% dividend. So maybe you could buy for the dividend. They kind of remind me of Ford. Ford has a 5% dividend, but Ford is also lower than they were in the year 1997. So, and same with Verizon. Verizon has a 6% dividend, but lower than it was, before the year 2000. So I just, it's tough buying these stocks, to be honest with you. I just don't really think they're going to outperform on a total return point of view, but you do get the nice dividend. But yeah, the mall companies, it's tough. Not trying to bag on anyone's stock though. How was it? Hey, what up, Eunice? Appreciate that. Yeah, it was good. Hope y'all are having a good Monday, Labor Day weekend. So, MKL stock. Are you talking about this Canadian exchange gold company? I don't think you are. Unfortunately, I can't find that stock. Oh, I typed in MLK, dude. What am I doing? MKL. Okay, Markle Group. Okay, wow. $2,000 share price. They're a $25 billion company, but they're trading at a fair valuation. Let's see here. They're an insurance company, Markle Ventures. How's their ventures business doing? That's up 6% year over year. How about the insurance? And they're in investing. So they had a huge beat on, wow, look at that huge beat on revenue. Analysts were expecting basically 4 billion and they made 4.6 billion. Huge beat on net income per share as well. So they beat on net income by 40%. There was a triple B quarter, beat on revenue, beat on net income, 600 mil of net income this quarter, no dividends. So I wonder if they're doing share buybacks. If this would load here, I could find it out. Got rid of Ford. Yeah, XYZ Steve, Ford is good, but it just won't really outperform the market in the long run. So I kind of agree with that decision. They did buy back some shares, so that's interesting. They look good. What is your recommendation? First off, none of this is financial advice, but one of my I recommend having the backbone of your portfolio just the S&P 500, and then after buying the S&P 500, I'd pick and choose some of your favorite companies that you use daily. Like see what you use, like Meta, Google, McDonald's. I own Amazon, Coca-Cola. Invest in what you know. I got a little bit of DocuSign. I wouldn't buy DocuSign here. They're way overvalued. Like Progressive Corp. We use Constellation Energy for our utility bills, so I own Constellation Energy stock. Robinhood, AMD. You have an AMD graphics card. Reddit, Disney. So anyway, invest in what you use. So let's keep going here, and always do your own research. Go and look at their financials. Make sure, like you may use SiriusXM, or you may use Snapchat, but those are two terrible stocks that I wouldn't really recommend buying. So always do your own research. I don't actually own any REITs. No. Someone said NEO, please. Here's a stock I would avoid, to be honest with you. I feel bad if you own NEO stock. This is a Chinese company, so you do pay an ADR fee. But here's why I'd stay away from this company. So if you look in the top right, the market cap here, they're worth $14.4 billion. I believe they just reported earnings, and there was some good news or something. I don't know, but EV sales stay strong in China. But yeah, here's the bad news about NEO, and the one reason I can't even touch this stock is because they're burning through money. Remember, the whole company is worth $14 billion, and they lost $1 billion this quarter, and $1 billion last quarter, $800 million the previous quarter, and this is in USD. So NEO, and look what that did to their balance sheet. They now have the exact same amount of liabilities as assets when they used to have more assets and liabilities. So those net income losses scare me. What happens is, hey, RYA, I'm on a brokerage right here, by the way, where you buy stocks. It's my favorite one. It's in the link tree in my bio. It's the very first link there. So pretty cool. Oh yeah, you can track all the super investors as well. That's a new feature they just added. Like you can see Nancy Pelosi's portfolio. These are super investors that buy SEC loft to make all their trades public, and you can like batch trade follow them, set your trades. It's the lowest fee, free brokerage. My favorite one. Or you can just happen into Google. It's just a brokerage called Moomoo. Link tree in bio, first link there. But yeah, all right, let's keep going here. What up, Francisco? UNH, yo, I'll pull up UNH after this one stock right here. MK said, what about T. Rowe Price Group? Then we'll pull up that one after this. Yeah, so I do own T. Rowe Price Group, by the way. This is my second highest yielding play. So this company has a 5% dividend, and here's why they actually have room to raise the dividend, which is pretty cool. Yeah, hey, XYZ Steve, it's in the link tree in my bio, the very first link there. So here's the thing. They have a 4.66% dividend, and the payout ratio is only at 55%. And here's another cool. This is the best part. I'll give all the highlights here. They have a low multiple. They trade at 12 times net income, so very low net income multiple. They have no debt whatsoever. So they have no debt, trading at 12 times net income, making $500 million plus in net income a quarter, a 5% dividend. You know what? Let's go see for ourselves how much the dividend cost exactly. Here's how you can do a dividend payout ratio. So they made $556 million of net income just this quarter. Let's go see how much the dividend cost exactly. And it cost exactly $285 million in net income a quarter. So that's a very safe dividend payout ratio. And since they have leftover money, they have no debt to pay off. So what are they doing with all this leftover cash? They're returning it to you via share buybacks. They spent $100 million on buybacks this quarter, $200 million last quarter. That's close to the same amount they spent on their dividend. So they're just so shareholder-friendly company. Here's what those buybacks are doing for you. So the net income grew by 14%, but the net income per share, actually, they must have had a little one-time adjustment last quarter. Anyway, you own a couple percent more of the company than you did a year ago on top of the 5% yield. So let's go look at UnitedHealth right here. You know who just bought a bunch of UnitedHealth? That would be the homie Buffett. So if we go to his newest position, he just bought 5 million shares of UnitedHealth, which is pretty crazy. And Warren Buffett doesn't buy a stock unless he really does his due diligence in a company. So when you say S&P 500, what ticker symbol do you say? Yeah, for the S&P 500, that's ticker symbol VOO. Ticker symbol VOO is the S&P 500. And no way, Turk. Dude, with the money gun. No way. Turk, thank you so much for the gift there. Dude, hope you're having a great holiday today. If you got a stock you want me to look at, Turk, let me know. I really appreciate that little gift there. All right, so wait, Steve, is the link tree not in my bio? Yo, Steve, it's in the link tree in my bio. It's that very first link there. It's just a brokerage where you buy stocks. It's called Moomoo. But here's UNH right here. This reason the stock gapped up so much is because literally they gapped up solely on Warren Buffett buying the stock like crazy. He actually bought his shares at $320 a share, and it's still less than that. It's $309 a share. The one thing though for this stock, this is why they're trading at 13 times net income. The future is uncertain and the net income is expected to fall by 50% year over year, but maybe the analysts are too harsh. The analysts are expecting the EPS to go from $6 to $1.70. And the dividend costs $2.20 of net income per share, so they actually won't even be able to afford the dividend in 2 quarters. That's why the multiple is so low. But for right now, I mean, the business is doing good. You get a 2.8% dividend. Warren Buffett's buying the company, so he sees some of this. So, but that being said, I would try and buy UNH under 300 a share. I'm not too enthusiastic about it over 300 a share, just for the risk reward ratio. But yeah, why is that ticker symbol is wrong? UnitedHealth Group Incorporated. It says Oh, someone did a typing error. Oh, wait. Oh, no, they didn't. Never mind. Yo, legend. Thanks for the roses, bro. And Broke Boy Fabio. Dude, for the 16 roses. I really appreciate you, man. Thanks, W Stream. Yo, thank you, bro. I really appreciate you, brother. Yo, let me check on the market very quickly. Let's see how stocks are moving in the overnight market. So, please do Duchess Bank. Yo, video games. What's the ticker symbol for Duchess Bank? I think that's how you pronounce that. I'm probably pronouncing that wrong. But oh, hold on here, bro. My thing just disconnected. So sorry. Yo, my Wi-Fi's been bugging today. I'm so sorry. Yo, if you wanted the follow button, we go live every day, by the way. I sell nothing. I have no course book, nothing like that. So yeah, the S&P 500 is barely green, up 0.01% right now. Wow. SoFi is jumping up right now. Bonds are down. Okay, so how do you know Warren Buffett is buying and not closing out a short position? You never know. But, Warren Buffett has to, make all his changes by SEC law, has to make them public. So we can see anything he sold out of. Oh, he completely sold out of T-Mobile stock, the most recent filing. And his newest positions, completely new positions for him, was UNH, DR Horton, and Lamar Advertising. At Billboard REIT, he decreased his position in some of these stocks right here. Bank of America, VeriSign, but and increased his position in these stocks. Anywho, yeah, you can kind of see his exact weighting. Like 21% of his portfolio is in Apple, 16% American Express. What are his smallest holdings? Let's see. Let's go all the way to the bottom. Oh, here it is. VeriSign, F-Wonk. Oh, Formula One. Warren Buffett owns Formula One. Interesting. Sorry. Oh, how broker? Yeah. Hey, by the way, this is if you want to get this brokerage I'm on, it's in the link tree in my bio. Very first link there. It's my favorite one. Link tree in bio first link there, or you can just type it into Google. Just a brokerage called Moomoo. It's my favorite one. It's an affiliate link, full disclosure. So actually, if you sign up with my link up there and deposit $100, we'll both get like a fractional share of NVIDIA. We'll both get some free stocks. Full disclosure, I do get some incentives. So anyway, here's a Starbucks right here. This stock has been struggling for a while. Check this out. They're the same prices they were back in 2019. And the reason Starbucks has been struggling is because of their pricing power and their margins. So check this out. If we look at the revenue year over year, the revenue seems fine. The revenue is up by 3%. But here's the bad news. The revenue is up by 3, but the profits are down by 47. And this wasn't some one-time adjustment. This was real. And here's the especially bad part. Remember this number. They made $558 million this quarter, even less last quarter. But they made $558 million of net income this quarter that actually couldn't even afford the dividend. If we go to how much their dividend cost every quarter, it legit cost $693 million. So if Starbucks doesn't make at the very least $693 million of net income a quarter, they won't be able to afford the dividend. So for the past 2 quarters, they made net income, but they really didn't because all of the net income they made got eaten up to the dividend. So they didn't retain any of this money. So that's why Starbucks has been struggling so lately. I think they need a healthy dividend cut, or at least the margins need to start recovering. Hey, what up, First Heart? How's it going? Here's another stock that I think is a bit unsustainable dividend is UPS right here. So I think they're a dividend trap, and they also need a healthy dividend cut, if I'm being honest with you. Oh, ticker symbol DBK. Oh, hey, yeah, we'll look at DBK after this. So this is United Parcel right here. If we go to the dividend, they have a 7.5% dividend yield. So really nice dividend yield on UPS. But here's the thing: if we go and check to see if they can sustainably afford the dividend, we got to ask ourselves, can we trust this 7.5% dividend to not get cut? Here's why I think no. So they made 1.28 billion this quarter, 1.2 bill last quarter, but 1.28 billion this quarter, they at least need to make 1.35 billion. So again, another company that the dividend is at risk of a cut. They couldn't afford the dividend this quarter, couldn't afford it last quarter. So all their profits just got eaten up to the dividend. They have no leftover money, no retained money. And that's why the stock, I think, is the same price that it was back in 2012. It's unfortunate, but yeah. That's just my honest thoughts there. Just showing you the numbers for yourself. Of course, you can draw your own conclusion. None of this is financial advice. Hey, Rivian Millionaire, it's you again. Good to see you, bro. We'll check out HUM. We'll check out that one too. They're kind of like UNH as well. So DBK, I can't find that stock when I look it up. You know what? Maybe I can type in the name for you. I don't normally do this, so you're welcome. DEU, Duchess Bank. Oh, it's ticker symbol DB, bro. It's ticker symbol DB. Okay, let's do it. So they're a bank right here. Okay, they have not done too well. Actually, they've recovered very nicely the past couple of weeks here. Look at that stock price. They're a $67 billion company, so that's a very big market cap. They're a European company, of course, so we're going to convert their currency to USD. So now it's converting right now, but we're going to look at their revenue in USD instead of European dollars. So, or the euros. I don't know why I said European dollars, but yeah, look at that. This is good news. They made $2 billion of net income this quarter, $2 billion last quarter. If you kind of average it out here, they're making, well over $1 billion of net income a quarter. So yeah, investment bank, private bank, they're in asset management. How's the asset management business doing? Wow, yeah, look at the growth. The asset management business is up 20% year over year to a new record. So that's good to see. They also have a 2.3% dividend yield. Pretty nice. Hey, thanks, Rivian Millionaire. I do appreciate you, man. Let's look at HUM. HUM, yeah, by the way, if y'all want to hit the subscribe button, the follow button, we go live every day. So, hey, Crash, no way for the 3 roses. I appreciate you, man. We'll look at Home Depot as well. I got you. And Domino's Pizza. Hey, Domino's Pizza is a cool company. So here's Humana. Actually, this one might be different from UNH. Let's go see what they do, actually. So insurance. Okay, so yeah, they're an insurance business. All the revenue comes from the U.S. The net income is expected to go negative in 2 quarters, but it was negative this quarter. What are the sales doing? So the sales are up by 10% year over year, so they do have nice sales growth. If you average out every quarter, they are making a couple $100 million in net income every quarter, which is good. But I know there's a lot of regulation headwinds around them. What up, Jess? Hey, Nathan, live every day. Thought it was Sunday. Yeah, hey, no, Jess. Yeah, hey, we go live every day, not just Sunday. Did I say it was just Sunday? Hey, if I did, I didn't mean to. Yeah, we do go live every day. But on Sunday, that's our best day. We do go live twice on Sunday, every Sunday. So here's here's Home Depot. Then we can pull up Domino's Pizza and Tencent. Yo, Jace, I love Tencent. And PayPal. I'll try and get to all the stocks here. Don't worry. And thanks again for the roses there, Crash. So here's Home Depot stock. They're kind of like the home builders. And as we go into a lower interest rate environment, people will start spending more on their houses. And Home Depot will receive more money. This is also a nice dividend growth company. They have a 2.3% dividend yield. Very nice. They're trading at 27 times net income, and they're making $3 to $5 billion in net income every quarter. So they're making a nice chunk of change. So that's why they're doing so good. I like that one. I would just buy and hold them for the long run. So what up, Luffy? He said Domino's Pizza. Warren Buffett owns this stock as well, which is pretty cool. What's the yield on this company? So you get a 1.5% dividend, a fair payout ratio, only a 36% payout ratio. Someone said, bro, you've been live forever. Yeah, hey, I've been live for 2 hours and 12 minutes. I'm probably not going to be live for too much longer, but we'll try and get through all these stocks here. I appreciate y'all. And here's the money they're making. So yeah, they're making 150 million pretty much in net income a quarter. How are the sales growing? Hopefully more than single digits. Well, actually McDonald's is growing single digits. So a load here. Come on, man. Okay, revenue. So revenue's up by 4% year over year. I think investors maybe wanted more growth, or did analysts expect that? So yeah, they met on revenue expectations. They missed on net income in the most recent quarter, but beat on EBIT. In 2 quarters, the net income is supposed to go back to a record $5.51 of EPS. They collect a lot of franchise royalties, so they have these intangible assets that are on the balance sheet. So don't worry about this balance sheet; it's actually not concerning, just like McDonald's or like a Wingstop. So let's see. Oh yeah, Tencent. This is one of the few Chinese stocks that I really recommend. If you're looking for a gaming stock, this is a very cool one. This company owns Riot Games. So if you've heard of League of Legends, Valorant, they own that. They also own PUBG. They own 50% of Epic Games, which is Fortnite. So they own 50% of Fortnite and Epic Games. They own Supercell as well. So if you've heard of Clash of Clans, Clash Royale, they also own that. They own 10% of Reddit, 10% of Snapchat, 10% of so many. Dude, this is just like a behemoth. If this was an American company, they'd legit be a Mag 7 stock. They're worth $710 billion. They're Chinese, so they just trade at an inherently lower multiple. But this is my favorite, actually probably second favorite Chinese stock of all time. Pretty cool. Adobe. Yeah, what up, Dino? He said Adobe. So this is a software company. And the thesis has been hurting them, but I think it's been overly priced into the stock. So come on, Adobe. There we go. So Adobe, they own Photoshop, After Effects. Oh my goodness. There we go. Adobe stocks. So they've been struggling recently. They own Adobe, Acrobat, After Effects, Photoshop. They literally invented the PDF format. If you didn't know, Adobe legit created the .pdf and then open sourced it, made it free for everyone to use. So if you like PDFs, you can thank Adobe. But anyway, one thing hurting them is their thesis right now. ChatGPT makes great logos. I know someone that's made a great logo in ChatGPT that take me a long time to recreate in Photoshop. So in 10 years from now, where will Adobe be? Where will Photoshop be needed? Will some of their products be needed? Maybe not. But for right now, the business is booming. They're printing money, $1.8 billion of net income every quarter. The free cash flow is even better, over $2 billion of free cash flow a quarter. They could, acquire some companies, because look at this. What is Adobe doing with $1.8 billion of net income a quarter? Because Adobe doesn't pay a dividend. Well, here's how they return money to you. It's via share buybacks. They spent $3.5 billion just this quarter buying back their own shares. That's a huge amount of money. And $3 billion the quarter before. So here's what that does. The net income is up by 7.5, but net income per share is up by 12.9. Thanks to the share buybacks. So they next Intel. Hey, at least Adobe makes real profits. Intel burns through money. ONDS has been on my radar. Hey, what up, Jane? ONDS is interesting. And B69 said HUBC stock. What's this one? Hub Cybersecurity. Yeah, we won't really cover this one. If you look in the top right, they're only worth 22 mil. So that's an extremely small market cap. I feel bad if you own this one. And they lost 40 mil. They have a terrible balance sheet. Yeah, I can see why they're at all-time lows. Be super, super careful with that one, in my opinion. They don't look like one I trust, really. What's another company that's kind of in the same situation as Adobe? If you look at Adobe stock and PayPal, they kind of look similar. And they both don't pay a dividend, and they're both buying back their own stock like crazy. So keep it simple here. The net income's up by 11, but net income per share is up by 19 on PayPal. PayPal has legit bought back 8% of the entire company in the past year. But here's also why the stock's been struggling. They traded this commodity multiple because they're not growing too well. They're trading at a 15 PE. That means they're not really expected to lose or make you any money. It's because the sales growth are single digits. Sales are up by 5%. The last quarter it was 1%. So we want to see the growth come back to PayPal, but we love the buybacks over there. Ronaldo said CRM and ONDS. We'll look at ONDS as well. Then we could look at SENS. So here's Salesforce. This is another software play that's been getting hit, just like Adobe. They're the same price as they were back in 2020. But I love Salesforce. They own some great assets. They own Slack, for example. And look how diversified their revenue streams are. They're in services, sales, platform, and other integration. But one thing I think why the stock has been basically been flat for 5 years is because the growth has kind of slowed. The sales are up by 7.6, sales are up by 7, but the net income is only up by 0.5. So that means in the most recent quarter, their net margin, their margins did fall a bit year over year. Actually, if this will load here. Yeah, there it is. So the net income fell by 7% year over year. It's not the end of the world. They're still printing money, 1.5 bill plus a net income a quarter. And then here's another thing. The free cash flow only grew by 3.5. So the net income only grew by 0.5. Free cash flow is only up by 3.5. I think investors want to see growth come back to Salesforce, but one way they kind of just answered that is they just acquired ticker symbol INFA. So if we go to INFA right here, the reason the stock looks so weird and flat like this is because Salesforce literally just bought the company entirely. So all this revenue right here, this 400 mil of revenue a quarter now goes to Salesforce and all their other metrics. I don't know if they're making net income or free cash flow, but if they are, that goes to Salesforce. So here's ONDS right here. This is Ondas Holdings. It's like an autonomous driving company. I don't know if I'd buy this one here at like this all-time high or 52-week high level, but here's some good news about the stock. The revenue is expected to continue to trend up. The same time last year, it was 4 mil. And it's expected to go to 9 mil. So revenue is expected to go to 10 million a quarter in 2 years or in 2 quarters from now. Bad news is they're still burning through a lot of money. They're losing 10 mil plus net income a quarter. But they just beefed up their balance sheet by issuing shares. We can see that from the cash from financing activities. If a company dilutes you and issues shares, that'll be here. So they issued $51 million worth of stock and diluted you with it, but that fortified their balance sheet. They probably did the right thing with how good the stock has been. But anyway, they're interesting. They're still really small. I'd be careful. So Robert said SENS, and then we can look at ZENA or ZETA. Let me know which one you're talking about. What up, Miracle? Yeah, we can look at Broadcom, Palantir, AIRO. What up, Inc? So here's Sensonics. I haven't heard of this one before. They're very small. Oh my goodness. It says I'm streaming on TikTok as well as YouTube, and TikTok every hour, if you're AFK, they make you fill out a CAPTCHA. Like, why would a live streaming okay. Sorry. This is Sensonic. They're a $370 million stock, and they're pretty much at an all-time low, so I feel bad if you own this one. The market's pretty much at all-time highs, and this one is nowhere near. So they have revenue, but only 6 million of revenue a quarter. They're losing 15 mil of net income a quarter, so that's kind of the tough part. They've lost 60 million of net income the past year. Losing 60 million is very significant when you're only worth $370 million. That's a huge chunk of your market cap. So that's why I think the stock's at all-time lows. There's almost real bankruptcy risk here. And that's my, analyzing them from a financial point of view. It's not. But yeah, I'd be careful with that one just for those reasons. They just look like a very small company. So someone said, or Jand and Keller said Xena Tech stock, another very small one. Top Chinese stock right now, probably Tencent or FUTU stock, Jace. I love those. So again, a very small $100 million company. They're also Canadian, so we're going to convert their revenue from Canadian to USD. Let's see. All their revenue comes from the US. Do they have sales though? They do, but again, 1 million of sales this quarter. At least it's grown from this same time last year. But again, it's a very small company, so that's something you got to be very, very careful with. Losing a bit of money. They do have a decent balance sheet because they IPO, but I got to wait to buy this company. I mean, only 1 million of revenue. Those just aren't the kind of stocks that I can trust and believe in. But here's one that I do trust and believe in. This is Broadcom right here, an extremely growthy company. It's kind of like NVIDIA. It's like an NVIDIA competitor, but you get a higher yield. like a 0.75% dividend is very good for this industry. So you get a near 1% dividend. A lot of people know Broadcom for their semiconductor solutions, but their main growth driver has been from their software business. If we look at this like a year ago, it used to only chill at like 1.9, basically 2 billion of revenue a quarter. Now it's over 6 billion. Like these year-over-year growth rates in the middle are ridiculous at Broadcom. So they're just extremely growthy, and not just, sales, but actual profits. That's what FCF stands for. Free cash flow is up 45% year over year to 6.4 billion. They made 5 billion in net income this quarter. They had a one-time adjustment this quarter. That's why the net income multiple looks so artificially high. The PE is actually like 25% lower than what it's stated right now. But yeah, anyway, Broadcom's cool. I do like them. So, you know what? We'll look at one last stock here for you. Oh, wait, Crash Override. Thanks again for all those roses, dude. I do really appreciate that. By the way, if y'all want to hit the follow button, we go live every day. Another one we don't really cover, $100 million company. They're up 36% on Friday, so actually there must have been some good news here, but it's just you can't really trust these stocks. And they're European, so we'll convert to USD. Do they have sales even? So yeah, they basically no sales. 40,000 of sales this quarter. They're worth 100 mil. I mean, from a financial point of view, I don't think, Crash, you can really trust that stock. So yeah, I hope you guys. We'll look at AIRO too. So this is AIRO Group. They just IPO'd in June, so they haven't even been public for that long. How much are they worth? They're only worth 600 mil, so a very small market cap, and they sell drones. That's very interesting. So if you're looking for a drone play, looks like they sell drones. The revenue, most of the revenue, do note 90% of the revenue comes from Europe, but the sales just blew up there. That's very nice. The sales are up 151% year over year. So there you go. And I'll re-add them to the watch list. That's your drone play. So anyway, guys, if you want to, hey, by the way, the very best way to support me is to subscribe to my YouTube channel. I stream on there as well if you missed anything. A lot of people like to watch the stream on the replay. And sometimes I talk too fast, so you can replay. So yeah, I'm also streaming on YouTube. Best way to support me, subscribe to the YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. The market just turned red. RIP the SPY. It's only down by 0.08%. But yeah, anyway, we'll be live tomorrow. We go live every day. See you very soon. I sell nothing. Also, watch out for people impersonating me. I'll never follow you, DM you. I don't sell nothing. I have no course book. I have no WhatsApp, Telegram. Watch out for people impersonating me. It's not me. But see you later. Have a great rest of your Monday. Happy holiday. Today was some sort of holiday. Labor Day, I think. Yeah. See you. Hey, thanks for y'all on the YouTube stream. Hey, INC Maxi, I'm trying to put up the YouTube stream instead of TikTok. Most of my viewers are on TikTok, so I do really appreciate for all y'all on the YouTube stream. TikTok keeps randomly taking down my streams, so I do really appreciate it. But have a great